Okay. So yesterday we have completed the section 80G. 80G gives deduction with respect to donation, and deduction is allowed to all SSC. In this case, two important points are required to be kept in mind. Number one, deduction is allowed for donation made in sum of money. Donation is in kind is not allowed as deduction. Number two, donation exceeding 2,000 rupees should be made by any mode other than cash. Then only deduction can be claimed. Deduction is allowed based on the proof of payment. And category A, one point is added here: Prime Minister Citizen Assistance and Relief in Emergency Situation Fund, PM CARES Fund. This was created because of this COVID-19. So this we have completed, and I think last we had solved question number 6. So now we move on to section 80G. This was given to us homework to read it. Section 80G gives deduction with respect to rent paid. See, food, clothing, and shelter. These things should be available at a very reasonable cost. So it is the duty of the government to ensure that food, clothing, and shelter is available at a reasonable cost. In any country, these things should be available at a reasonable cost. India is a food surplus nation, so there is no problem of food here. Clothing is not a problem because this is the country of Mahatma Gandhi. Shelter is a problem for this country. Everyone is not having their own house. So government has decided that government will support the citizen for providing shelter. For that, government is putting efforts in different directions. In every state, you have a state board, housing board. In every state, you are having a housing board. Those housing boards would construct the property and would sell the property to the citizens of that particular state. People who are domiciled in a particular state can buy the property from the housing board, which is formed by the state government, at a no profit, no loss situation. So whatever cost is there, on that cost only they would sell the property. They would not earn any profit. So on one hand, the government is providing housing to the people. On the other hand, central government has made a lot of sections in Income Tax Act to provide the benefit with respect to housing. See, person who already owns his own house, in that case, there is no need to support him. There is no need to support him. There is no need to help him out because he is already having his own house. Section 80G is deduction for rent paid. See, person who is having his own house, there is no need to support him. Second possibility, person is having his house, but he has taken loan for acquiring the house. In that case, whatever loan repayment he is doing, principal amount he can claim deduction in section 80C. Principal repayment he can claim deduction in section 80C, and interest he can claim deduction in section 24 clause B. So if you have acquired the property by taking a loan, then it's giving you deduction with respect to interest as well as principal. Both amounts are given to as deduction. What if you don't have your own property? If you don't have your own property, then you will stay in a rented property. In that case, government says, whatever rent you are paying, for that we will give you some benefit in the Income Tax Act. So whatever rent is being paid by the person, for that he can claim deduction. He can claim different benefits in different sections that will understand. So who is the eligible SSC here? Eligible SSC is individual. Other persons cannot claim the deduction in section 80G. Only individual can claim deduction in section 80G. Number two, SSC, individual SSC, we are dividing them in two categories. Number one, those who are doing job, and number two, those who are self-employed. Those who are self-employed, they can claim deduction under section 80GG in respect of rent paid. Whatever rent they have paid, for that they can claim deduction in section 80GG. Those who are doing job, for them, you have to see whether their employer is paying them HRA. If these people are doing job and they are in receipt of HRA, they are receiving house rent allowance. They are receiving house rent allowance from employer. If they are receiving house rent allowance from employer, then let them claim deduction for rent paid in section 10 clause 13. Do you recollect income from salary chapter, section 10 clause 13, exemption with respect to house rent allowance? Yes or no? Yes. So if an individual is doing job, his employer is giving him HRA for that house rent allowance, he can claim exemption in section 10 clause 13. Exemption in section 10 clause 13 is lower of following three amounts. I would revise that house rent allowance provision for you. Exemption in section 10 clause 13A with respect to house rent allowance is lower of following three amounts. Number one, rent paid minus 10% of salary. Number two, if he stays in a metro city, then 50% of salary, otherwise non-metro 40% of salary. And number three, actual HRA ratio. Here, for the purpose of computation of HRA exemption, salary includes basic salary, DA recognized, and turnover commission. It includes basic salary, DA recognized, and turnover commission. So a person who is doing a job and he is receiving HRA should claim exemption of HRA. He cannot come to section 80GG for claiming deduction in respect of rent paid. So those people who are self-employed, they are not receiving any HRA. So there is no question of claiming exemption of HRA. Those people who are doing job and they are in receipt of HRA, they can claim exemption of HRA. 80GG deduction will not be allowed to them. 80GG deduction will not be allowed to them. See, government cannot give you exemption as well as deduction for the same thing. Two benefits cannot be given for the same purpose. Section 1013 exemption is given for housing. Section 80GG deduction is also given for housing. But we cannot give you benefit twice. Either you claim exemption or you claim deduction. So person doing job and they are in receipt of HRA, for them it is mandatory to claim HRA exemption in 1013A. So they cannot come to section 80GG and claim the deduction. Person who are doing job but they are not in receipt of HRA. Person who are doing job but they are not in receipt of HRA. In other words, their employer does not pay them house rent allowance. In that case, you cannot claim any exemption in section 10 clause 13 even if you want. Because exemption in section 10 clause 13 is lower of following three amounts. The third amount is actual HRA received. So, since they are not in receipt of HRA, they cannot claim any exemption in section 10 clause 13A. Whatever rent they are paying, for that they can claim deduction in section 80GG. They can claim deduction in section 80GG. Yes, have you understood this much? Who can claim exemption, who cannot claim exemption? Yes, okay. Point 3. Point 3 is putting a restriction on claiming exemption. Once again, who can claim and who cannot claim? Same thing, but from different point of view. See, there are three places, in fact: place of duty, place of residence, and say for example, any place other than place of duty, other than place of residence. In other words, we can divide first of all places into three. Number one, place of duty. Number two, place of residence. And number three, say native place. Native place. Say for example, there is an individual. He is doing job in the city of Mumbai. In Mumbai, we have a location called as Dadar. In Mumbai, we have a location called as Dadar. So he is doing job at Dadar. So that Dadar will be called as place of duty. His office is situated at Dadar. Number two, he is staying at Virar in a rented premises. In Mumbai city, Virar is at one end towards the suburbs of Mumbai, last station, and Dadar is on part of South Mumbai. So Virar is called as place of residence. Dadar is place of duty. Virar is place of residence. From Virar to Dadar, if you go by train, it would take around 1.5 hours. So, in our example, place of duty is Dadar and place of residence is Virar. Now I am saying that that person is from North India. So his native place is say UP, Uttar Pradesh. So in Uttar Pradesh, in his village, he is owning a house. That place is called as place other than place of duty and place of residence. So in Uttar Pradesh, in village, he is owning a house. That is neither a place of duty nor a place of residence. Because that person is not residing in Uttar Pradesh. He is residing in Mumbai only. So we are saying that SSC, his spouse, minor child, or HUF in which SSC is member. SSC, his spouse, minor child, and HUF in which SSC is a member. If any of these persons, they are owning a house where either at place of duty or at place of residence. They are owning a house either at place of duty or at place of residence. Then you are not eligible to claim deduction under section 80. If you are already owning a house, then why you are residing in rented premises? Say for example, an individual already owns house in Mumbai, and he stays in a rented premises. So government says, what is the point of staying in a rented premises if you are already owning a house? So in that case, government says, if you are already owning a house, either at place of duty, Dadar, or at place of residence, Virar, in that case, we are not going to give you any deduction under section 80. We are going to give the benefit of deduction and exemption to those who are not owning any house. So if either you yourself, either SSC himself or his spouse or minor child or HCF, if any of these persons are owning house either at place of duty or at place of residence, then that person will not be allowed any deduction under section 80. That person will not be allowed any deduction under section 80. If SSC himself, his spouse, minor child, HCF, any of them does not own any house at such place. These people does not own any house at such place. In that case, 80 deduction can be claimed. If you are not owning a house at place of duty, place of residence, then you might be staying in a rented premises. In that case, we will give you deduction for rent paid in section 80. Have you understood this point number 3? Yes. Point number 3 is also focusing on the same thing. Who can claim deduction and who cannot claim deduction. Now let's move to next point. Next point says owning a house at any other place. Owning a house at any other place. Any other place means that place which is neither a place of duty nor a place of residence. In our example, Uttar Pradesh, village in Uttar Pradesh. There, SSC is owning a house. SSC is owning a house at Uttar Pradesh. Uttar Pradesh is neither a place of duty nor a place of residence. In that case, we will ask him that house in village in Uttar Pradesh, are you claiming it to be self-occupied? He says, yes, I am claiming it to be self-occupied in my income tax return. Then government says, we have already given you some benefit with respect to housing. You are owning a house. We are allowing you to consider that house as self-occupied. In other words, you will take the net annual value of that property as nil. You will take the net annual value of that property as nil. In other words, we are not going to get any taxes in the house property head. To take the annual value of property as nil is also a benefit granted to you. Otherwise, generally annual value is taxable. But in case of self-occupied property, we are asking you to take the annual value of property as nil. That is also a benefit granted by the government. Because if there is no income, then you are saving tax. So in case of self-occupied property, they are allowing you to take the property as an annual value as nil. So that is also a benefit granted to you. So government says, if you are claiming the property to be self-occupied, then we have already given you some benefit. In that case, we are not going to give any benefit to you once again. Which property we are talking about? Property situated in a place which is neither a place of duty nor a place of residence. Property situated at a place which is neither a place of duty nor a place of residence. Or another possibility, SSC claims that property to pay let out property. That Uttar Pradesh property, he said is a let out property. I am offering tax on that under the income from house property. So on that Uttar Pradesh property, government is getting the tax. On that Uttar Pradesh property, government is getting the tax. And since government is getting the tax on that property, government says we will allow you deduction under section 80G. For what? For rent paid in the city of Mumbai. He is staying in a rented premises in the city of Mumbai. For that rent, he can claim deduction under section 80G because the house which is owned by him in Uttar Pradesh, he is claiming it to be a let out property or deemed let out property. So on that, government is getting the tax. So the house which is the rented house in Mumbai, whereas in point number 4, SSC is kept a separate and his relatives, spouse, minor child, each of they are kept a separate. Different rules for SSC, different rules for other relatives. So SSE is owning a house, claims to be a self-owned property, then he cannot claim deduction under section 80GG. His relatives, minor child, spouse, HUF, they are owning the house. In that case, SSE can claim deduction under section 80GG in respect of rent paid for rented premises in the city of Mumbai. Yes, have you understood the fourth point? Yes or no? Okay. So let's move on to point number 5. Point number 5 will explain you what is the quantum of deduction. What is the quantum of deduction? This is the last part. Point number 5 is the last part. What is the quantum of deduction? The deduction under section 80GG in respect of rent paid will be lower of following three amounts. Will be lower of following three amounts. See, if you try to compare this 80GG deduction with the exemption given for house rent allowance in section 10 clause 13A, to a greater extent these are same. In house rent allowance, exemption under section 10 clause 13A, exemption was lower of following three amounts. Exemption was lower of following three amounts. Number one was rent paid minus 10% of salary. But here we are also offering benefit of deduction to self-employed people. So we can't take the limit of 10% of salary. So government says we have taken 10% of total income instead of 10% of salary. So this first point is copied from section 10 clause 13 only. There it was rent paid minus 10% of salary. Here it is rent paid minus 10% of total income. Second point. Second point, there it was for metro city 50% of salary, for non-metro 40% of salary. See, salary might be a smaller amount, but total income might be a very big amount. And if we give you deduction under section 80GG, which is to the tune of 50% of your total income, then major portion will go in deduction only. Major portion of your income will get deduction in the form of 80GG only. Therefore, what government has done now? Government has picked up that metro city percentage, which was 50%. 50% of salary. Here the limit is based on total income, not salary. That 50% of salary is taken. Now government is reducing that 50% by 50%. Government is reducing 50% by 50%. So they have arrived at 25%. So second limit they have kept 25% of total income. Total income might be a very big amount. Therefore, government says here we are reducing the percentage from 50% to 25%. The second point is 25% of total income. Third point is maximum deduction. Third point is maximum deduction, which is 5,000 per month. So, under any circumstance, you cannot claim a deduction of more than 60,000. You cannot claim a deduction of more than 60,000 rupees. That is the maximum limit. Now you may think, what do you mean by total income? In point number 1 as well as in point number 2, percentage is required to be applied on total income. The question is, what do you mean by total income? In house rent allowance exemption was calculated based on salary, and there the salary was basic salary, DA recognized plus turnover commission. Similarly here, maximum limit is based on total income. So what do you mean by total income? That same old definition is taken. Yesterday we had seen in section 80G. In section 80G, there was category C and D now. For category C and D, for ascertaining the amount of deduction, first of all, we had ascertained what? Qualifying amount. For donations pertaining to category C and D, qualifying amount was how much? Actual donation or 10% of adjusted gross total income. What do you mean by adjusted gross total income? Gross total income minus long-term capital gain minus short-term capital gain under section 111A and minus all chapter 6 reduction section 80C to 80U except 80 double G. Except 80 double G. Same definition is written here. Total income, adjusted gross total income equals to gross total income minus long term capital gain minus short term capital gain under section 111A minus all chapter 6 deductions, section 80C to 80U, except 80 double G. There in section 80G it was written except 80G because you were calculating 80G. Here it is written except 80 double G because here you are calculating 80 double G. .256 point, page number 256. We will refer, don't worry. This page number might not be 256, yeah. It might be some other page. At this point. Okay. We will refer to this. We will refer, don't worry. So we were on this last point, meaning of total income. So adjusted total income means gross total income minus LTCG minus STCG under section 111A minus all chapter 6 deduction minus all chapter 6 deduction right from section 80C to 80U except 80 double G. Why except 80 double G? Because we are calculating 80 double G only. Now you may think, should I deduct 80 G here? Should I deduct 80 G? Yes. But while calculating 80 G, should I deduct 80 double G there? Should I deduct 80 double G? Answer is yes. Here we have written deduction under chapter 6 80U except 80G. So are you required to deduct 80 double G? Answer is yes. So while you calculate 80G, you calculate the limit, and for that you are required to deduct 80 double G. But while you calculate 80 double G, there also, while calculating the limit, you are required to deduct 80G. So if 80G and 80 double G both are coming in the same question, then what will happen? Because now they have become interdependent on each other now. For calculating 80G, you need to deduct 80 double G. And for calculating 80 double G, you need to deduct 80G. So this deduction have become interdependent on each other. In that case, we will have to make a mathematical equation saying that let deduction under section 80G be X, let deduction under section 80 double G be Y. So you have to denominate it as X and Y and then make a equation and solve the equation. Such kind of questions are not asked in the examination, but I'm just explaining you, saying that yes, there can be a clash. In that case, you have to make a equation and ascertain the deduction amount. Yes, have you understood this? Section 80 double G. So this now you can read 80 double G, you can read. Let's move on to a practical question. Question number 7. 80 double G, you can read at home. Yesterday also I had given you this section to read. Now we move on to question number 7. Mr. G, who is working in Delhi as a manager of X Limited, furnishes the following particulars of his income for the year 2021. Salary income is 93,600. Interest on bank FD 1 lakh. Winning from card game 11,000. The salary income will be taxable under income from salaries only. Interest on bank FD will be taxable under IFOs. Winning from card game will be taxable under IFOs. Further, it says he was provided with a furnished accommodation in Noida, UP, for which G pays a rent of 2,000 per month to the employer. So his employer has provided him accommodation. So if you recollect the chapter of income from salary, whenever employer provides accommodation, either it can be rent-free accommodation or concessional accommodation. Here it is clearly told that he is paying a rent of 2,000 per month to employer. So it is not a rent-free accommodation. It can be concessional accommodation. That we have to find out whether it is concessional or not. That we have to find out. But more of the story is whatever rent he is paying to his employer, whatever rent he is paying to his employer, for that rent also he can claim deduction in section 80GG. He can claim deduction in section 80GG. So this 2,000 per month is the amount of rent which is paid by Mr. G to his employer X Limited. For that he can claim deduction in section 80GG. Next, it says neither he nor his wife nor any minor child owns any residential accommodation at Delhi or Noida. Do you understand what is the meaning of this? What is Delhi? Delhi is a place of duty. What is Noida, UP? Noida is a place of residence. Delhi is a place of duty. Noida is a place of residence. So they are trying to tell you here in this sentence, saying that neither SSC nor his wife nor minor child owns any property at place of duty or place of residence. In other words, that condition is fulfilled. This condition is fulfilled. Yes, have you understood this? Further, it says, however, his wife owns a accommodation in Bombay, which she is claiming to be self-occupied in her assessment. His wife let her claim benefit of self-occupation. It doesn't make any difference. Mr. Z can claim reduction under section 80GG. Compute the total income of G for the assessment at 21-22, assuming that he donates 6,000 to National Children Fund. With this National Children Fund donation, you can claim deduction in section 80G. In section 80G in category A. In category A, you can claim deduction. See, here your section 80G as well as section 80GG. Both are in the same question, but you are not expected to make any equation except. Why? Because there is a clash only when the donation pertains to category C and D. This donation doesn't pertain to category C and D. It pertains to which category? It pertains to category A. Therefore, there is no clash. So I'm giving you 2-3 minutes time. You can solve this on your own. Quickly go through this. See, salary amount which is given to in the question is the final amount of salary. Salary amount is given to in the question is the final taxable amount of salary. What you can do, you can modify this question slightly. Against the word salary income, next into the bracket you can write computed. Against the word salary income, in the bracket you can write computed. Here, after salary income words, in the bracket you can write computed. In other words, this this concessional accommodation, if there is any concession, that might have been already taken into account in this calculation 93,600. Okay. So if you see the question, first part is salary amount itself. First part is salary amount itself. What is that salary amount? 93,600. 93,600. Then we have income from other sources. In that we have interest on bank deposits, interest on bank FD. This is 1 lakh rupees. Then you also are winning from card game. You also are winning from card games, that is 11,000. So your income from other sources will be 1,11,000. Your income from salaries is 93,600. Your income from other sources is 1,11,000. So your gross total income is 2,04,600. 2,04,600. That is your gross total income. From that, you can claim two deductions. One for Section 80G donation, amount contributed to National Children Fund, and the other one for Section 80G in respect of rent paid. So donation under Chapter 6A, Section 80G, donation to National Children Fund, 100% of 6,000. So the deduction is 6,000 rupees. And then we need to calculate the deduction under Section 80G with respect to rent paid. Deduction under Section 80G with respect to rent paid is lower of following three amounts. Number one, rent paid minus 10% of total income. Number two, 25% of total income. And number three, 5,000 per month. So can you tell me what is the rent paid here? Line number two, they are saying rent paid is 2,000 per month. So yearly rent would be 24,000. 24,000. Minus what is 10% of total income? What do you mean by total income? Gross total income, which is 2,04,600, minus LTCG. You do not have LTCG. Minus STCG under Section 111A. You do not have STCG under Section 111A. Minus all Chapter 6 reduction. So you have Chapter 6 reduction, Section 80G, donation. So from 2,04,600, you deduct 6,000. You will get the amount as 1,98,600. Of that 1,98,600, you take 10%. That is 19,860. Now from 24,000, you deduct 19,860. You arrive at the amount of 4,140. So this is your amount number one. This is your amount number one. Then amount number two is 25% of total income. 25% of total income means 25% of 1,98,600. 1,98,600 into 25% will give you 49,650. It will give you 49,650. Then the third amount, 5,000 multiplied by 12, that is 60,000. Out of all these three amounts, 4140, 49,650 and 60,000, the lowest amount is 4140. That would be the amount of deduction under Section 80G. So our 80G deduction is 6,000, 80G deduction is 4140. Total Chapter 6 deduction is 10,140. Total Chapter 6 reduction is 10,140. Deduct that 10,140 to arrive at the total income of 194,460. 194,460. Yes. Is that very clear? Shall we proceed? So we have completed section 80 double G. Now we move on to next section, that is section 80 GGA. 80 GGA, actually this section is already learned. This section is already discussed with you in the chapter of PGVP. Refer this point number 2. Partly it is discussed, partly it is not discussed. See, CA Institute has removed 2-3 sections from the PGVP chapter. Yes, do one thing. Dikshit is asking me to cover that point which I have told you. It's appearing on page number 256. Income from other sources chapter. Question number 4, point number H. Question number 4, point number H says he stays in a rented premises, paying a rent of 8,000 per month. Since the house is too big for his family, he has sublet 1/4 portion of the house for a rent of 2,500 per month. This 2,500 per month is an income for him. So he is staying in a house, he is paying a rent of 8,000 per month. Out of entire house, 1/4 portion is let out. So he is residing in 3/4 portion. Rent of that 3/4 portion is how much? Rent of that 3/4 portion is 6,000. For that he can claim deduction in section 80 double G. For that he can claim deduction in section 80 double G. This is what I wanted to just tell you. That here he can claim deduction in section 80 double G, that's all. Dikshit, is that clear? So whatever rent he has paid, he can claim deduction in section 80 double G. We did not calculate 80 double G in this question because question was just asking you to calculate income from other sources amount. Question was just asking you to calculate income from other sources. If this same question is asking you to calculate total income, then you have to calculate 80 double G. So we have completed section 80 double G and question number 7. Let's move on to next section, that is 80 GGA. See, 80 GGA is basically copied section. It is copied from 2 sections of PGVP chapter. Number 1 is section 35 that we have already covered up in the chapter of income from business profession. Section 35, deduction in respect of scientific research expenditure. Deduction in respect of scientific research expenditure. And we have one more section in the chapter of PGVP, section 35 CCA. That 35 CCA I have not covered in my notes because CA Institute has removed that section from the new module. From the May 2021 module, CA Institute has removed that section. So that section is not relevant for May 21 onwards. Income Tax Act section is last year it was there in the module, now it is removed. So I am not covered in my notes. But I am just telling you that this section 80 GGA is copied from 2 sections. It is copied from 2 sections. Number 1, section 35 and number 2, section 35 CC. So there is nothing new to learn in this section. Now you may think, if it is copied section, why government made 2 sections for the same deduction? Once in the chapter of PGP and once here in the chapter of deductions. So the answer is, if you are having PGBP income, you will claim deduction in section 35 and section 35 CCA while calculating your income from business profession. But what if you are not having any PGBP income? If you do not have any PGBP income, then you can claim deduction for that same thing here in chapter 6A under section 80 GG. Have you understood this point? So, who can claim deduction in 80 GGA? Those people who are not having any PGUP income. If at all they are having any PGUP income, then they have to go to the chapter of PGUP and claim deduction in section 80, in section 35 and section 35 CCA. If you are having PGUP income, then it is mandatory for you to claim deduction in section 80 CCA. You can't go to the chapter of PGUP. If you have PGP, go to PGP. If you don't have that, come here and claim deduction. So eligible SSE, all SSE not having income chargeable under that profits and gains of business profit. Not having income chargeable under that profits and gains of business or profession. Nature of deduction. Deduction is allowed under this section in respect of donation given to point number A, B, C, D, E, F. Point number A, approved research association. Donation is given to approved research association for scientific research. Point number B, donation is given to approved university, college, other institution for scientific, social as well as statistical research. This also we have already covered. These first 2 points are covered in the chapter of PGBP in section 35. While discussing section 35, we had covered these points. Next point, point number C, D, E, F. These are actually part of section 35 CCA. An association or institution undertaking approved rural development program. See, India can develop only if the development is taking place in entire country, every part in a equitable manner. If metro city will grow and the suburb or villages will not grow, then there is no benefit of that growth and development. Every area should develop. Rural areas should also develop. Urban areas should also develop. So, government felt that cities are anyway developed, but rural areas not developed. So, government came out with some rural development programs. So, if you donate money to any association or institution which is approved by the government and it is carrying on a rural development program, whatever money you donate to these people, you can claim it as deduction in section 80 GGA. Besides that, there are certain institutions who are not doing rural development. They are not carrying out any rural development program, but they are providing training to people. They are providing training to people, and those people are working for rural development. So, number one, if you donate money to those institutions who are carrying out the rural development program, you can claim deduction for that donation. Number two, you donate money to whom? To those institutions who are providing training, to persons, and those persons will be working for rural development. So, for this institution, if you give donation, you can claim deduction. Point number E, we have a National Fund for Rural Development, NFRD, National Fund for Rural Development. This fund is set up by the central government. If you donate money in that fund, you can claim deduction. See, in section 80G donation, in category A, we have seen a lot of different funds, Prime Minister National Relief Fund, PM CARES Fund, etc. Similarly, we have one fund called as National Fund for Rural Development. This is set up by the central government. If you donate money in this fund, you can claim deduction in section 80 GGA. Is that very clear? Yes. So government was working for rural development. Government was working for rural development. So government has approved some institutions who can work for rural development. And government themselves, they are also working for rural development. But When government went to the rural areas for the development, to carry out the development projects, government realized that those people who were there in the rural area, they have already left the rural area and they have gone to cities for the purpose of employment. And in cities, these people are not having any houses. These people are belonging to rural area. They do not have any house in city, but they have come to city for earning some revenue. So in city, they have made huts. In slums, they are staying. The government says in urban areas, now a lot of slums are set up. And a lot of poor people are residing in urban area only. So our intention is to alleviate poverty from the urban area. Therefore, government inserted one more point saying that if you donate money to National Urban Poverty Eradication Fund, you donate money to what? National Urban Poverty Eradication Fund. This fund is set up by the central government or public sector company or local authority or association institution which is approved by national committee for carrying out a eligible project or scheme. You donate money to these funds or these institutions, you can claim 100% deduction in section 80 GGA. You can claim 100% deduction in section 80 GGA. What is the mode of payment? If the amount of donation is up to 2000, you can make payment by any mode. If it is exceeding 2000, then you have to make payment by any mode other than cash. Means you have to make payment in check. But this amendment is introduced with effect from 1st of June 2020. So you need to be very careful. You need to be very careful. You need to look at the date of expenditure or the date of donation. The date on which you are donating money or contributing money, that date is relevant. If that date is, say, for example, up to 31st May 2020, then the limit is 10,000 rupees. Up to 10,000 cash payment will be allowed. Over and about 10,000, if the amount of donation is exceeding 10,000, then the payment should be made by any mode other than cash. But this 10,000 is reduced to 2,000 with effect from 1st June 2020. So in 80G also we have a limit of 2,000. Here we had a limit of 10,000, which is now reduced to 2,000. But this 2,000 limit is applicable only with effect from 1st June 20. So for the first two months of the previous year 2021, limit of 10,000 will be applicable. For next 10 months, that is with effect from 1st June 20, limit of 2,000 will be applicable. No double deduction. If you have already claimed deduction in some other section for that same donation, you cannot claim deduction in section 80 GGA. Yes, is that very clear? Yes or no? Yes, okay. So with this, we have completed section 80 double G as well as GGA. Now we are having two sections. We'll discuss these two sections simultaneously. That is section 80 GGB and section 80 GGC. Dikshit, up to 2,000 if the donation is in cash, deduction will be allowed. 2,000 is the limit applicable for amount donated on or after 1st June. Up to 31st May, limit of 10,000 will still apply. But from next year onwards, limit of 2 will be there. 10 is already gone in the current year. But still in the current year, 2021, up to 31st May, limit of 10 is applicable and not limit of 2,000. Is that very clear? So now we move on to section 80 GGB and section 80 GGC, both sections at the same time. And for that, I have made one small flowchart. Along with section 80 GGB, 80 GGC, We'll also try to connect section 37(2)(b). Section 37(2)(b) was taught to you in the chapter of PGVP. If you recollect, section 37(2)(b) says if you incur any advertisement expenditure, for advertising in the publication of political party, if you have done the publication, if you have done the advertisement in any publication of political party, then that advertisement cost will not be allowed to be as deduction. Now, I don't remember whether we have covered this section 37(2)(b) in the chapter of PGP or not. Even if we have not covered, we'll cover here. It is a very simple and one-line section. So right now we are moving on to two sections at the same time, section 80 GGB and section 80 GGC. 80 GGB says deduction will be allowed in respect of contribution given by companies. So section 80 GGB is applicable only to company assessment, not to everyone. So section 80 GGB says deduction is allowed in respect of contribution given by companies to the political party or electoral trust. So amount donated by the contribution given by companies to the political party or electoral trust can be claimed as deduction in section 80 GGB, whereas contribution given by any other person means other than company. Contribution is given by any other person to political party or electoral trust, then they can claim deduction in section 80 GGC. So for company they have made section 80 GGB, and for persons other than company they have made section 80 GGC. Now, what is the common point in these two sections? Both are giving deduction for the same thing, that is amount contributed to political party or electoral trust. So these two sections will be discussing at the same time simultaneously. Both the sections are giving deduction with respect to contribution to political party. Whatever money you contribute to political party, that can be claimed as deduction. This contribution to political party can take two forms. In other words, you can contribute to money to the political party by two different methodologies. Number one, either you can donate money to political party. You have donated money to political party, or you have done the advertisement of your product or your service or your organization in any publication of a political party. Political party is publishing, say for example, pamphlet, brochure, etc. In that you have given the advertisement of your product, service or organization. That is also considered as contribution to political party. So actually contribution is taking two forms. Contribution can be in the nature of donation to political party, or it can be in the nature of advertisement in the publication of political party. Instead of using the word contribution is taking two forms, we can say you can give money to the political party either as a donation or as a advertisement for publication of advertisement, for publishing advertisement in their pamphlet, brochure, etc. First of all, let us focus on the left hand side, donation to political party. Say for example, you have donated money to political party, and that donation you have debited to your profit and loss account. Can you claim deduction for that donation while computing your business income? Answer is no. Why? Because in the chapter of PGBP, you don't have any section which gives you deduction for amount contributed to political party or amount donated to political party. Without a section, you can't claim deduction. Can you go to section 37, subsection 1, general deduction section and claim deduction? Answer is no. Why? Because section 37, subsection 1 says deduction will be allowed provided expenditures related to business. Deduction will be allowed only if the expenditure is related to business. If you are donating money to political party, you can't say that this is an expenditure related to business. So section 37 is not going to give you any deduction, and you don't have any other specific section which allows deduction with respect to advertisement in the publication which allows deduction with respect to donation made to the political party. So what is going to happen if in your profit and loss account donation to political party is debited? Then first step what you have to take is you have to add back that amount of donation to the net profit as per profit and loss account while ascertaining your business income. While you are calculating your business income, you start the solution with net profit as per profit and loss account. Whatever donation to political parties appearing on the debit side of profit and loss account, that should be disallowed. Why it should be disallowed? Because in the chapter of PGP, you don't have any section which gives you deduction with respect to donation to political party. Now that donation, while computing business income, it is disallowed because it is not expense relating to business and we don't have any section to give you deduction. Now the point is, can you claim deduction for this donation in section 80 GGB and section 80 GGC? Answer is yes. Amount donated to political party or an electoral trust can be claimed as deduction in section 80 GGB and section 80 GGC. If it is a company SSC, they can claim deduction in section 80 GGB. If the SSC is other than company, then deduction is allowed in section 80 GGC. Is that very clear? So what would be the treatment of what would be the tax treatment of amount donated to political party or a electoral trust? If you have debited a profit and loss account, then while computing business income, that will be added back. While computing business income, that will be added back. While computing total income, deduction can be claimed in section 80 GGB and section 80 GGC. Yes, this left hand side part is clear. Yes or no? Okay, let's now proceed to right hand side. Right hand side talks about advertisement in the publication of political party. The left hand side was purely a donation. Left hand side was purely a donation. Amount was donated to the political party. Right hand side, it is an advertisement in the publication of political party. Political party might be publishing some template, brochure or election manifesto. In that, you have advertised your product, you have advertised your services, or you have given the advertisement for your organization. That advertisement cost is actually related to business because your purpose is to advertise your product, service, or the organization. That advertisement cost generally is allowed as deduction. While computing income, it is allowed as deduction in section 37 subsection 1. But in the chapter of PGVP, we have section 37 2B. In the chapter of PGVP, we have section 37 subsection 2B. That section 37 subsection 2B says any advertisement in any publication of political party will be disallowed. Any advertisement in any publication of political party will be disallowed. So what will happen? While you compute your business income, that advertisement cost will be disallowed. That will be added back while computing your income. So same thing is happening for donation. Donation also was getting added back. This advertisement cost will also get added back while computing business income. Now, the point is, while computing total income, can you claim deduction for this in section 80 GGB and section 80 GGC? For that, important point to be noted is section 80 GGB and section 80 GGC, they are allowing deduction for what? So the question is whether the advertisement cost should be considered as contribution to political party or not. Whether the advertisement expenditure should it be considered as a contribution to political party? Because section 80 GGB and section 80 GGC, they are giving you deduction for contribution to political party. ATGGB, ATGC doesn't use the word, they do not use the word advertisement. Neither they are using the word donation. They are using the word contribution. The word contribution, general meaning of the word contribution is donation. Contribution is nothing but contributing something. So when we donate something, we are contributing for a particular cause. So this word contribution is not defined anywhere, but if you refer to dictionary, then the meaning of word contribution is nothing but donation. So the question is, can you claim deduction for this advertisement in the publication of political party in section 80 GGB and section 80 GGC? Because general meaning is what? Contribution is understood as donation. It is not understood as advertisement. So let me tell you that in Companies Act 1956, we had one section, section 293A. And in Companies Act 2013, we are having section 182. These sections, they are defining what do you mean by contribution to political party. So section 293 of Companies Act 1956 and section 192A of Companies Act 2013, they are defining the word contribution to political party to include two things. Number one, donation to political party, and number two, advertisement in the publication of political party. So as per the Companies Act, the word contribution includes two things. Number one, donation, and number two, advertisement. Now question is, who can adopt the meaning given in the Companies Act? Can every SSC adopt the meaning given in the Companies Act? Answer is no. Only company can adopt this meaning now. So for companies, we are saying that advertisement cost will also be considered as contribution to political party. So if some advertisement cost is incurred for publishing an advertisement in any template, brochure, etc. of political party, then while computing business income, that will be disallowed as per section 37 subsection 2. Whereas while you compute the total income, while computing your total income, if you are an Indian company, then you can claim deduction in section 80 GGB. If you are an Indian company, then you can claim deduction in section 80 GGB. What if you are not a, what if SSC is not a company? Can he also claim deduction for this advertisement cost? Answer is no, because he cannot adopt the meaning from the Companies Act. Companies Act is not applicable to other SSCs like individual HUF firm, etc. So they cannot adopt the meaning of Companies Act. So the word contribution is not defined in the Income Tax Act. So they have to adopt the meaning from the dictionary. And as per dictionary, the word contribution means donation only. As per dictionary, word contribution means donation only. So in other words, person other than company can claim deduction for amount donated to political party, but cannot claim deduction for advertisement cost incurred for giving advertisement in any publication of political party. So other than Indian company, ATGGC deduction is not allowed. Have you understood this? Yes or no? So what is two-line conclusion? Donation to political party while calculating business income, that will be added back. While computing total income, company can claim deduction in section 80 GGB. Other than company, SSC can claim deduction in section 80 GGC. Another point is advertisement in the publication of political party. While it is debited to profit and loss account, it should be added back. It should be disallowed while computing business income. This is as per section 37 subsection 2. Thereafter, while computing total income, company can claim deduction in section 80 GGB, but other SSCs cannot claim deduction. Companies can claim deduction in section 80 GGB, but other SSCs cannot claim deduction in section 80 GGC. So with this, we have completed section 80 GGB and section 80 GGC. And with this, our first category of section are completely over. If you recollect, when we started this chapter, I told you that in this chapter, it is chapter 6A of the Income Tax Act. In this chapter, we have sections starting from section 80C, ending at section 80. This from section 80C to 80GGC, all the sections are over. See, few sections I can help you to remember the alphabets. Few sections I can help you to remember the alphabets. See, here there is one more section 80CCG. You remove that. It is already deleted. Section 80GGC is already deleted. Let me refer to the module. Yes. What I can do is you can remove that from this 80CCG. 80C, triple C, CCD, that you can remember on your own. 80D. 80D is for what? Health insurance. If you fall sick, you will go to hospital and doctor will provide you a treatment. So D for doctor. D for doctor means deduction will be allowed for what? Health insurance. 80DD is giving you deduction in respect of maintenance, including the medical treatment of a person suffering from disability. So you can remember 80DD is disabled dependent person. 80DD, disabled dependent. Next is section 80DDB. Next is section 80DDB. This is for medical treatment of specified disease. See, few dialogues or few mnemonics I am having in Hindi. So I do not know whether you will understand or not. I say that person might be having huge sum of money, but he will always be. Say for example, person is having 500 crores, but is suffering from cancer. Then he having so much amount of money is of no point. That person will always remain sad because he is suffering from a disease, and a person who is suffering from the severe diseases will always be dependent on others. Will always be dependent on others. So section 80 DDB I say first D is dukhi. The word for the word sad, na? In English we have a word sad, but in Hindi we say dukhi. Second D is dependent. That person is dependent on others, and he is ill person. So he's suffering from a disease. So B means bimar. Bimar, suffering from a disease. So ATDDB is dukhi dependent bimar. Dukhi dependent bimar. ATE, interest on loan taken for higher education. E for education. E for education. ATEE. ATEE is deduction with respect to interest on loan taken for acquisition of scheme. So double E first Imarat is an electric bike. So you can remember EEB, electric bike. ATEEB, you can remember it as electric bike. ATG is deduction for donation. Deduction for donation. Donation means गरीबों को पैसा दो. Give money to poor people. In Hindi we call this as गरीबों को पैसा दो. गरीब means poor people. So ATG गरीबों को पैसा दो. Next is section 80 double G. This is giving you reduction with respect to rent. In Hindi, house is called as ghar. In Hindi, house is called as ghar and rent is called as kiraya. So 80 double G is ghar ka kiraya. 80 double G is ghar ka kiraya. 80 GGA, GGB, GGC, I do not have anything. So you need to remember this on your own. Yes, Sarvana, I'll have to take Hindi class to make you understand all these things. ATU, that ATU is already over. ATU, if you are disabled, you go to section ATU. If you are having a disabled person who is dependent on you, you go to section 80 double D, and if you yourself are disabled, you go to section 80U. Now we are left with only 5 sections in income-based deduction. In income-based deduction, actually there are a lot of sections, but they are not part of your syllabus at intermediate level. For example, we have section 80IA, 80IB, 80IC, 80ID, 80IE. We have 80IAB, 80IBA. We have a lot of sections in income-based deduction. So all of them are not forming part of your syllabus. In your syllabus, they have put it limited sections. Out of income-based deduction, they have taken limited number of sections. Yes, they have taken only 5 sections. This ATM is a budget 2020 amendment. but it is not there at CA intermediate level. It is there only at CA final level. So you can remove this section 80M. Section 80M now you can remove. We are not going to discuss this. I have removed from the notes, but from this list I have not removed. So you can remove this. Two sections we are removed from this list. Section 80 CCG and section 80M. Now we are left with 5 sections: 80 JJA, sorry, 80 JJAA, 80 QQB, 80 RRB, 80 TTA, and 80 TTB. So we will first move on to JJAA. JJAA. See, what is this section 80 JJAA? This section is giving deduction for creating employment. This section is giving deduction for creating employment. So any business entity which is creating employment, which has created employment during any particular year, can get deduction under section 80 JJAA. Deduction is allowed for what? Deduction is allowed for employee cost. See, if you have appointed an employee, whatever remuneration you are paying to that employee is nothing but an employee cost for you. That employee cost you can claim it as deduction. That employee cost you can claim it as deduction. But now you might be thinking that anyway I will claim deduction while computing my business income. Yes, while computing business income, you will claim it as deduction. But here we are giving you extra deduction over and above what you have already claimed while computing your business income. We are giving extra deduction here. For example, you have appointed a new employee and you are paying a salary of 10,000 per month to him. Then throughout the previous year 2021, you might have paid him 1,20,000. That 1,20,000 you might have debited to your profit and loss account. And you might have already claimed a deduction for that 1,20,000 while computing your business income. Here in the chapter of deductions, in section 80 JJAA, we are going to give you extra deduction over and above what you have already claimed. How much extra? 30%. So in our example, you had paid a remuneration of 1,20,000 to that particular employee throughout the year. Of that 1,20,000, you take out 30%. That is 36,000. 1,20,000 to 30%, that is 36,000. That 36,000 will be allowed to as deduction in section 80 JJAA. So you have actually incurred how much? You have actually incurred only 120. That 120 is allowed as deduction while computing business income, and 36 extra deduction will be allowed while computing total income in section 80 JJAA. So government wants to give incentive for generating employment. Government wants to give incentive to all those business organizations who are generating employment. So objective of this section is to extend employment generation incentive to all sectors. This deduction can be claimed by SSA engaged in any business, but he should be covered by section 44AB. In other words, his books of accounts should be audited. In other words, if he is doing business, then his turnover should be more than 1 crore, and if he is into profession, then his gross assets should be more than 50 lakhs. His gross assets should be more than 50 lakhs, and if he is doing business, then his turnover should be more than 1 crore. So eligible SSC is any person carrying on business to whom section 4480 applies. To whom section 4480 applies means those whose business turnover is more than 1 crore or gross asset from profession is more than 50 lakhs. Do you remember section 44AB from the chapter of PGP? 44AB is audit of books of accounts. 44AB, you can remember it as AB, audit of books. 44AB is audit of books. What is the quantum of deduction allowed in section 80 JJAA? is 30% of additional employee cost. How much reduction is allowed? 30% of additional employee cost. And deduction is allowed for how many years? Deduction is allowed for 3 years. 3 years starting from which year? Starting from the year in which new employee is hired. So if you have hired any new employee, whatever remuneration you are paying to that employee, you can claim deduction for that entire remuneration while computing your business income. And you also claim deduction to the extent of 30%. Deduction to the extent of 30% in section 80 double J double A. So 30% of additional employee cost will be allowed as deduction. %30 of additional employee cost will be allowed as deduction. Deduction will be allowed for 3 assessment years. Deduction will be allowed for 3 assessment years. For example, you have hired an employee in the year 2021. Then you can claim deduction for 3 years: 2021, 21-22, and 22-23. You can claim deduction for 3 years: 2021, 21-22, and 22-23. What will be the amount of deduction? It will not be the entire employee cost. It will be only 30% of additional employee cost. Now, we need to understand two things. What do you mean by additional employee? What do you mean by additional employee? And we need to also understand what do you mean by employee cost. Employee cost will include what? Will it include only basic salary, or will it include basic salary as well as allowance, or will it include basic salary, allowance, perquisite, everything? That is what we need to understand. So first of all, let us try to understand what do you mean by employee cost. So here in the table, we have defined what do you mean by employee cost. It says employee cost will include any emoluments paid or payable to employee. Whether company can claim deduction? Answer is yes. This deduction under section 80 double J double A is allowed to all SSs. The only condition is their books of accounts should be audited. In case of companies, you know that their books of accounts are always audited. So definitely they can claim deduction. Company can definitely claim deduction. Yes? Shall I proceed? So what do you mean by additional employee cost? Additional employee cost means what? Additional employee cost will include everything. Additional employee cost will include everything except point number 1 and 2. What is point number 1? Employer's contribution to pension fund, provident fund, any other fund for the benefit of employee. So number 1, it will not include employer's contribution to retirement fund. Whether it is pension fund, whether it is provident fund, or any other fund like approved superannuation fund. So whatever is employer's contribution to this fund now, that should not be considered as part of additional employee cost. And number 2, any lump sum payment should not be considered as part of additional employee cost. Lump sum payment will include gratuity, commuted pension, leave salary at the time of retirement, VRS compensation, superannuation. All these things will be considered as what? Lump sum consideration. This lump sum consideration should not be considered as part of employee cost. Have you understood this? Yes or no? So the question is, Whether basic salary should be included in employee cost? Yes. Whether dearness allowance should be included in employee cost? Yes. Recognized or ordinary? Both. Both. All allowance should be taken into account. Perquisites should also be taken into account. So employee cost will include basic salary. It will include all allowances. It will also include perquisites. Employee cost will include everything except these 2 points: employer contribution to retirement funds and any lump sum payment made to employee. These things will be excluded from employee cost. Yes, have you understood this much? Yes or no? Now, I told you that this section is for I told you that this section is giving incentive for generating an employment, for creating jobs. Who can claim deduction? Na? Every SSC whose books of accounts are required to be audited can claim deduction. But there are certain restrictions. There are certain restrictions. No deduction will be allowed if you are doing research. Hired 50 employees. When I started a company, Section 80JJAA was not there. Section 80JJAA was not there when I started the business. Thereafter, Section 80JJAA was introduced. Thereafter, Section 80JJAA was introduced. Now the point is, am I eligible to claim deduction under Section 80JJAA? Yes, only if I hire new employees. But I have already hired 50 employees now. When I hired those 50 employees, section was not there, so I could not claim any deduction. Now, if I hire extra employees over and above 50, for them I can claim deduction in Section 80JJAA. But there were a lot of SSCs who were manipulating the things to claim the deduction. So, say for example, what I did now, my company is A Limited. Deduction because, have you understood this point? Yes or no? Next point, this business should not be set up by transfer of second-hand plant and machinery from some other business. This business should not be set up by transfer of second-hand plant and machinery from some other business. In other words, for old business and for old employees which are already hired before introduction of this section, for them you can't claim deduction for 30% additional employee cost. Third point says, third condition says, if you want to claim deduction in Section 80JJAA, then you have to take a report from a chartered accountant. Chartered accountant will provide you a certificate. He will calculate the amount of deduction and he will provide you a certificate. Based on the amount written in that certificate, you can claim deduction. Now, we need to understand what is the meaning of additional employee. What is the meaning of additional employee? See, they are saying that employee will be called as additional employee only if he fulfills 4 conditions. Employee will be called as additional employee only if he is fulfilling 4 conditions. Number 1 condition is employee's total emoluments. Total emoluments means total benefits should be less than or equal to 25,000 per month. Means government wants you to create 4 jobs of 25,000 per month salary instead of 1 job of 1 lakh rupees per month salary. So government says, don't create jobs of higher remuneration. You create more number of jobs for lower remuneration because more people will get employment. So employee will be called as an additional employee only if his monthly remuneration is less than or equal to 25,000. If monthly remuneration is more than 25,000, then that employee will not be considered as an additional employee. For that employee, you cannot claim any deduction for remuneration paid to him. Yes, have you understood this point? The employee's monthly salary should be less than equal to 25,000. Then only that employee will be considered as additional employee. Then only you can claim deduction. Number 2, employee should be such that to whom you have offered employment for at least 240 days or more during the previous year. In other words, we are going to give deduction only if the employee has been offered an employment for a longer span of time. If you hire someone on a contractual basis for 1 month, 2 months, and if you pay remuneration to them, that amount cannot be considered as part of additional employee cost. You should provide an employment for at least 240 days or more. You should provide an employment in a particular financial year. You should provide an employment for minimum 240 days or more than that. Or if you are into the business of manufacturing apparel or footwear or leather products, then government has given concession. Instead of 240 days, if you have provided employment to your employees even for 150 days now, then also those remuneration paid to those employees would be considered as part of additional employee cost. So the first condition is the monthly remuneration of employees should be less than equal to 25,000. Second condition is you should have provided employment for at least 240 days or more during the previous year. Or in case of apparel, footwear or leather product business, instead of 240 days, 150 days or more. Dikshit, apparel means cloth. Dikshit, apparel means clothing business. This important note I will explain you. Say for example, I have hired a new employee. I have hired a new employee. To him, I have hired in the month of January. I have hired a new employee in the month of January. So I have provided him employment for how many days? Jan, Feb, March, around 90 days. Whatever remuneration I have paid to him for these 3 months, can I claim this deduction as part of additional employee cost? Answer is no. Because I have not offered employment to him for 240 days or more during the year. Or in case of clothing, footwear or leather product business, 150 days or more. But for that same employee, can I claim deduction in the next year? Because in current year, I have not offered him employment for 240 days or more. But in next year, he will be there with me for 240 days or more. Now. So government says yes. You have created employment in the current year. In the next year, you have not created employment for that employee. Year number 2, that employee is already hired in year number 1. But year number 1, since you did not offer him employment for 240 days or more, we did not give you any deduction in section 80JJAA. So government says we will give you deduction from year number 2 onwards. Second year of employment onwards, we will give you deduction. Why? Because second year of employment onwards, you would definitely provide him employment for 240 days or more, 150 days or more, as the case may be. Are you understanding? Yes or no? So you have to provide employment for 240 days or more, 150 days or more. Then only remuneration paid to those employees can be considered as part of additional employee cost. Dikshit, we will complete this section and then have a break. Let us complete this section. So first two conditions are over. Condition 3, employee should participate in recognized provident fund. Employee should participate in recognized provident fund. Employee should participate in recognized provident fund means he should be a permanent employee. Only permanent employee will participate in recognized provident fund. Na? So indirectly they are saying you temporary employees, na, we are not going to give any deduction. Temporary employees, if you have hired a temporary employee, for him, if you are paying any remuneration, for that we are not going to give you any deduction under section 80JJAA. 80JJAA deduction will be allowed only if the employee is participating in provident fund. In other words, he is a permanent employee. Condition number 4. Employee should not be any person. Employee should not be such a person in whose case government is contributing to pension scheme. For example, those people who are working in coal mines, say for example, in India we have a company called as Coal India Limited. In India we have a company called as Coal India Limited. So all those people who are working in coal mines, for them government may contribute some amount of money to their pension scheme. For them, government may contribute some amount of money to their pension scheme. If that is the case, then that employee will not be considered as additional employee. That employee will not be considered as additional employee. Dikshit has asked me question, sir, employee cost excludes provident fund and pension, but includes employee definition. No, Dikshit, don't misunderstand. See, employee cost does not include employer contribution to provident fund, pension fund, or any other fund. But here we are trying to understand what do you mean by additional employee. Now, every employee is not considered as an additional employee. Say for example, I have hired 10 people. I have hired 10 new persons. Everyone is not an additional employee. Employee will be considered as additional employee only if 4 conditions are fulfilled. Number 1 is monthly remuneration should be less than equal to 25,000. He should have been hired for at least 240 days or more. He should participate in provident fund, means he should be a permanent employee. He should participate in provident fund. That doesn't mean that employer contribution to provident fund will be forming part of employee cost. Employer's contribution to provident fund will never form part of cost. First of all, you have to decide whether an employee should be considered as an additional employee or not. If at all you are considering that new employee as part of additional employee, then you should proceed to calculate the additional employee cost. And while calculating that additional employee cost, employer's contribution to provident fund, pension fund, these things should be excluded. And condition number 4 says, if government is contributing something to the pension scheme of employee, in that case, those employees will not be considered as additional employee only. If those employees are not considered as additional employee, then you can't claim deduction for any remuneration paid to such an employee. You can't claim deduction for any remuneration paid to such an employee. So, referring to this 4 conditions, we are identifying whether a particular employee should be considered as additional employee or he should not be considered as additional employee. If he is not participating in provident fund or government is contributing some money to his pension fund, then those employees will not be considered as additional employee. So you remove those employees. For example, I have hired 10 persons. I have hired 10 persons. Out of 10 persons, 4 persons salary, monthly salary is more than 25,000. So that 4 persons will not be considered as additional employee. Only remaining 6 people will be considered as additional employee. Now I can claim deduction for employee cost only to the extent of 6 employees. Have you understood this very clearly? Yes or no? Yes, have you understood this? 4 conditions. So your step 1 is to identify whether an employee is an additional employee or not. Whether an employee is an additional employee or not. That is what you have to identify. If these 4 conditions are fulfilled, then we can consider an employee to be an additional employee. Then we can consider an employee to be additional employee. For those additional employees, then you ascertain the employee cost. While you are asserting the employee cost, you should not take into account employer's contribution to provident fund, pension fund. You should not take into account any lump sum payments. Besides that, you can take into account basic salary, allowance, perquisite, everything. Is that very, very clear? Yes or no? Yes. Now, let me tell you one more important point. See, deduction under section 80JJAA is allowed only if I have created some employment in the economy. If I have not created any employment, then no deduction. If you have hired some people, that doesn't mean that you have created employment. For example, at the beginning of your previous year is 2021. Your previous year is 2021. At the beginning of previous year 2021, you are having 10 employees. At the beginning of previous year 2021, you were having 10 employees. During the previous year 2021, you have hired 4 more employees. You have hired 4 more employees. So how many employees you might be having? 14. Out of those 14, 4 have left the company during the year. So 4 old employees have left and you have appointed 4 new employees. Can you tell me what will be the number of employees at the end of the year? At the beginning of the year, you had 10 employees. At the beginning of the year, you had 10 employees. Out of those 10, 4 have resigned and they have left the company. So in place of them, you have hired 4 new people. So there is an opening balance of 10 employees. 4 employees resigned. So outflow. 4 employees newly joined. So inflow. At the end of the year, there are only 10 employees. So government says, here you have not created any employment. Because at the beginning of the year, you have 10 employees. At the end of the year also, you are having 10 employees. So in this case, you are not going to get any deduction under section 80JJAA because you have not generated any employment. You will be considered to have generated employment only if the number of employees at the end of the year is more as compared to number of employees at the beginning of the year. Now say for example, you had 10 employees, 4 left. In place of those 4 employees, you have hired 5 new employees. Then at the end of the year, you are having how many employees? 11. At the beginning of the year, you had 10 employees. At the end of the year, you had 11 employees. Only that one extra employee, na? For that, you can claim deduction. So you can claim deduction in section 80JJAA only if you have hired some extra number of employees as compared to number of employees at the beginning of the year. Have you understood this point very clearly? Yes or no? Okay. What if I have set up a new business? Yes. What if I have set up a new business? If I have set up a new business, then what will be the number of employees at the beginning of the year? If I have set up a new business, number of employees at the beginning of the year is 0. So whatever employees I have hired, for everyone I can claim deduction under section 80JJAA, provided these 4 conditions are fulfilled. Provided these 4 conditions are fulfilled. Monthly salary should be less than equal to 25,000. Employment should have been offered for at least 240 days or more. They should participate in provident fund. Government should not contribute anything to pension scheme. If these 4 conditions are fulfilled, then they will be considered as additional employees. Say, for example, I have started a new business during the year, and during the year I have hired 10 people. So I have created 10 jobs, but that doesn't mean all those 10 employees will be considered as additional employees. They have to fulfill these 4 conditions. Out of 10 jobs, 10 employment which is created by me, in 4 jobs, the salary is more than 25,000 per month. So those will not be considered as additional employee. Those will be excluded from additional employee. Are you understanding this point? Yes or no? Yes. Now let me give you the last point. Last point. You can claim deduction for what? You can claim deduction for additional employee cost. How much percentage of additional employee cost you can claim deduction? You can claim deduction for 30% of additional employee cost. Deduction will be allowed to you provided all these emoluments, all these benefits, basic salary, allowance, etc. All these are paid by account pay check, account pay bank draft, ECS, etc. If you are paying salary to your employees in cash, if you are paying salary to your employees in cash, then that will not be allowed to be considered as part of additional employee cost. In other words, you cannot claim deduction for that. Yes, have you understood this much? So employee cost, 30% additional employee cost will be allowed as deduction, provided that employee cost, that remuneration, that benefit is given to employee by account pay check, account pay bank draft, etc. If you make payment of remuneration in cash, that won't be considered as part of additional employee cost. That will not be allowed as deduction. So with this, we have completed this section 80JJAA. Now, on this, we have one question, question number 8. Do you want to discuss this right now or after the break? So we are once again reading this question number 8. Before the break, we have discussed theoretical aspect of section 80JJAA. And this is question number 8, which is on section, exclusively on section 80JJAA. If at all CA Institute is having an intention to ask you question on this section 80JJAA, then definitely they will ask this question only, because they have only one question. I don't think examiner will take the efforts to draft a new question altogether. He may ask the same question. So Mr. A has commenced the business of manufacture of computers on 1st April 2000. So he has started the business newly in the current term. So at the beginning of the year, number of employees might be 0. He has employed 350 new employees during the previous year 2021. Details of whom are as follows. So all these employees are new employees. So 350 jobs are created, but they should be additional employee. They should fulfill those conditions. Otherwise, employee cost cannot be claimed as deduction. So these 350 employees are bifurcated into 4 lots. Number 1 lot, first lot is 75 employees. They were hired on 1st April 20. They are regular employees, and their total monthly emoluments per employee is 24,000. So can I say they are fulfilling all the conditions? 240 days or more employment is provided. They are regular employee, means they are participating in the provident fund. Their monthly emoluments does not exceed 25,000. So all these conditions are fulfilled. All these conditions are fulfilled. So yes, these 75 employees should be considered as additional employee, and their salary, their remuneration, their emolument, their benefits should be considered as additional employee cost. Then we have a second lot of employee of 125 employees. We have a second lot of employee, 125 employees. They were hired on 1st May. So definitely they also have been offered. These employees have also been offered employment of 240 days or more. They are regular employees, means they are also participating in provident fund, but their monthly emoluments is 26,000. In other words, they do not fulfill the first condition to be considered as an additional employee. Their monthly emolument should be less than or equal to 25,000. So in this case, it is 26,000. So they should not be considered as an additional employee. So what you can do now? You can circle this 26,000. Put a circle on this 26,000. Right? Monthly salary is greater than 25,000. Therefore, not an additional employee. Therefore, not an additional employee. So point 2 should not be taken into account for the purpose of computation of deduction under section 80JJAA. Point 3, third lot of employees are 50 employees. They are hired on 1st August. So August to March. August to March is 8 months. August to March, how many days? If you count the number of days, yes, it will be 240 days or more, correct? So employment has been provided for 240 days or more, that condition is fulfilled. But here they are saying that the employee is a casual employee. So the sheet says that it is 243 days. So that condition of 240 days is fulfilled. But here they are saying that they are casual employees. Casual employees means they are not participating in provident fund. Since they are not participating in provident fund, they should not be considered as an additional employee. Even though their monthly emoluments is less than equal to 25,000, they will not be considered as additional employee because they are not participating in provident fund. So this casual word you can circle this casual word and write somewhere here in the bottom margin. They do not participate in provident fund. That is what is written further in the question itself. They do not participate in provident fund. So not an additional employee. They are not an additional employee. So point number 3 also not eligible. Point number 4, last lot of 100 employees. They are hired on 1st September 2020. 1st September 2020 means they are hired for only 212 days in a year, which is less than 240 days. So that condition of 240 days or more employment is not fulfilled. They should not be considered as additional employee in the current term, but that same 100 employees can be considered as an additional employee in the next year. And next year onwards, I can computation for 3 years. So you can circle this date for September 20. Circle this date for September 20, and near that you can write somewhere employed for less than 240 days. Employed for less than 240 days. So not an additional employee. Not an additional employee. Out of 350 employees newly hired, how many employees will be considered as additional employee in the current year? Is only those who are forming part of the first lot, that is only 75 employees. So can you tell me what is their monthly emoluments? 24,000 per month per employee. So 24,000 multiplied by 12 months, because they are hired in the month of April. They have been offered employment in the month of April. So April to March, 12 months. So 24,000 per month is a salary. Multiplied by 12 months will be how much? 24,000 to 12. into 12 will be 2,88,000. That is for one employee. You need for 75 employees. So multiply by 75. This will give you 2 crore 16 lakhs. This will give you 2 crore 16 lakhs. Of this, deduction would be 30%. So into 3 by 10. 64 lakhs 80,000 will be the amount of deduction available under section 80JJAA. Is that very, very clear? 64 lakh 80,000 is quantum of reduction available under section 80JJAA. Let us read the further part of the question. It says regular employees participate in recognized provident fund while casual employees do not participate. That is what meaning we have taken. Compute the deduction, if any, available to Mr. A for the assessment year 21-22. If the profits and gains derived from manufacturing of computer that year is 75 lakhs and turnover is 2 crore 16 lakhs. See, intentionally to confuse you, they have kept the turnover at 2 crore 16 lakhs. We are not concerned with the turnover. But yes, turnover will be important in determining one thing, whether their books of accounts are required to be audited or not. So, looking at this 2.16 figure, you can say that yes, turnover is more than 1 crore. So, their books of accounts are audited. So, they are eligible for claiming deduction in section 80JJAA. So, whether the turnover is 2.16 crores or 1.5 crores, any case, if it is more than 1 crore, they are covered by section 44AB. And they are eligible to claim deduction under section 80JJAA. But intentionally they have kept the turnover at 2 crore 16 lakhs. What is the profit of the undertaking? 75 lakhs. And what is the quantum of deduction available? 64 lakhs 80,000 is the quantum of deduction available. So this is the first part of the question. This is the first part of the question. Now we move on to second part. What is that? It says, what would be your answer if Mr. A has commenced business of manufacture of footwear on 1st April 20. If he is engaged in the business of manufacture of footwear, then instead of 240 days, even if he provides employment for 150 days or more, then also in that case, employee will be considered as additional employee. See, second point now, second category, anyway, monthly emoluments are more than 25, so they should not be considered as additional employee. Third point, they are casual employees, do not participate in provident, so they are not additional employees. Fourth point, employment was provided only on 1st September 2012. So employed for how many days? 212 days. 212 days. So that is less than 240. But if it is in, if the SSE is in manufacturing of footwear business, then the condition is not 240, it is 150. 150 days or more. So this time we should include fourth lot of employees also. So in the second case, deduction would be definitely 64 lakh 80,000 plus for fourth lot also. For fourth lot, how much? 24,000 per month. Multiply how many months? Yes. 24,000 multiplied by September to March. 7 months. So it is 1,68,000 for one employee. You have 100 such employees. So it is 1 crore 68 lakhs. Of that you take out 30%. That is 50 lakh 40,000. 50 lakh 40,000 plus for the first lot 64 lakh 80,000. So total deduction will be 1 crore 15 lakhs 20,000. 1 crore 15 lakh 20,000. Have you understood this calculation? Yes or no? So let me show you the solution. Question number 8. Case 1. If Mr. A is engaged in the business of manufacture of computers, in that case deduction would be 6 crore 64 lakh 80,000. Deduction would be 64 lakh 80,000. Yes, is that very clear? 6480. First case. Second case. What is the amount we got in second case? 1 crore 15 lakh 20,000. Second case 1 crore 15 lakh 20,000. Yes, have you understood? So with this section 80 double J double A is over. Section 80 double J double A is over. Now we can move to section 80 QQB. We can move to section 80 QQB. This section I will be explaining from this handwritten notes. See this section na 80 QQB. Once you understand this section 80 QQB, then 80 RRB is on similar lines. 80 RRB is on similar lines. There is nothing new there. Only 1-2 points here and there. Entire section is same. So section 80 QQB gives deduction for what? It gives deduction for royalty income of author. It gives deduction for what? Royalty income of authors. See, a person for whom writing a book is a profession, he can be called as an author. So if that person is writing a book, then that author will go to the publisher. Publisher will print the book, he will sell the book in the market, and publisher will receive the sale proceeds of the book. From that, certain portion, certain percentage, he will give it to the author in the form of royalty. Now, can you imagine the profit and loss account of an author? How the profit and loss account of author will appear? What things you would have in the profit and loss account of author? In the profit and loss account credit side, you'll be having royalty income from publisher. If you imagine the profit and loss account of an author, on the credit side of profit and loss account, you'll be having royalty income from the publisher. On the debit side, you can have employee salary, you can have office rent, office electricity bill, you can have depreciation for assets. So you can have different expenditure, different income. Now, say for example, author has written the book. Once he has written the book, he will get the copyright done. He will go to the government office and he will take the copyright for that. Once he takes the copyright, he will be considered as the content owner of that book. No one can copy from his book without his permission, without his written permission. So say for example, author has written the book and he has taken the copyright for that book. Now, that author is going to the publisher. For example, that author is a new author. He has written the first book in his life. In that case, he is not a well-known person in the market now. He is not a seasoned person. He is he has written his first book. So he is not a seasoned author. So in that case, publisher will dominate the author. Publisher will dominate the author. In that case, publisher will say that I will publish the book provided you sell your copyright to me. And if author wishes to sell the copyright, then he will sell the copyright of the book to the publisher. Author will sell the copyright of the book to the publisher and author will receive some amount. That is transfer for copyright. That amount author has received for what? Receipt for transfer of copyright. In that case, it is a capital receipt for the author. It is not a revenue receipt. It is a capital receipt because he is transferring an intangible asset which is called as copyright. So author can transfer his copyright with respect to a particular book, and for transfer of copyright he may receive money from the publisher. Whatever money he has received from publisher is a capital receipt for him. It is not a revenue receipt, it is a capital receipt. This is one possibility. Another possibility is author has written the book. He is a seasoned author. He has not written the book for the first time. Already few books he have written and those books are sold in the market. He is a well-known author. People know him. That kind of author now, publisher cannot dominate him. In fact, author will dominate the publisher, saying that I have written this book, I want to sell this book, so kindly get it printed and you can sell it in the market. But you pay me 50% of the MRP. So author is dominating the publisher. He says that whatever MRP you keep for this book now, 50% of the MRP I should receive. So in that case, we say that author has received money from the publisher. There is a royalty. It is a revenue receipt. It is a revenue receipt. And this royalty is calculated at certain percentage of value of book sold. Whatever is the value of book sold now, of that 50% author is going to receive. In that case, we say it is a revenue receipt plus this royalty is calculated as certain percentage of value of book sold. Have you understood this second example? Yes. First example, I told you that author has transferred the copyright. So whatever money author has received on transferring copyright now, that is a capital receipt for him. Second example I gave you, saying that author has written the book. He has got the book published, and as per the terms and conditions of the agreement, author will receive 50% of the MRP of the book. In that case, we say it is not a capital receipt, it is a revenue receipt. And this royalty is received as certain percentage of value of book sold. Author has not transferred copyright to the publisher. He has just transferred publishing rights. He has just transferred publishing rights. So if you transfer publishing rights, then the publisher can publish only specified number of copies he can print. He can print only specified number of copies for which you have given the publishing right to him. Publishing right can be given for certain number of copies also or certain period also. Let me give you one more example. Say for example, Dikshit has written the book. Dikshit has written the book. And he is a seasoned author. So he has written a lot of books. He is going to a publisher and is asking the publisher to print and publish his book. So here publisher says that I can offer you a royalty of 3 lakhs for the entire year. Now whether I publish 30,000 copies, whether I print 30,000 copies or 3 lakh copies, you should not have any objection. You give me the publishing right for a period of 1 year. You give me the publishing right for a period of 1 year and I will pay you 3 lakh rupees. So here Dikshit has accepted. So Dikshit has received a lump sum amount of 3 lakhs. Since he has received a lump sum amount, that doesn't mean it is a revenue receipt. Sorry, that doesn't mean it is a capital receipt. It is still a revenue receipt. If you have received a lump sum amount, that does not mean that it is a capital receipt. It can still be considered as a revenue receipt because this is money received from the publisher for giving publishing right for a period of 1 year. If once the 1 year is over, next year once again, if the publisher wants to publish the book, he has to take my permission. So in this case also, the receipt is a revenue receipt, but the amount is received in lump sum. Amount is received in lump sum. Have you understood 3 examples? In the first example, it was a capital receipt. In the second and third example, it was a revenue receipt. But in second example, royalty was received as certain percentage of value of book sold. Whereas in the third example, lump sum amount of 3 lakh of royalty was received. If author has written the book, whatever royalty he receives will appear on the credit side of his profit and loss account. And debit side, you may have different expenses like printing and stationery, salary of typist, etc., etc. Now the point is, this royalty income would form part of PGVP. It would form part of PGVP income. And here we are giving you deduction for that same royalty income which is forming part of PGVP. So number 1 point, who can claim deduction? The answer is only resident individual can claim deduction. HUF cannot claim deduction. Firm, company, association, person, body of individual, these people cannot claim the deduction. Only individual can claim deduction. That too only resident individual. Non-resident individual cannot claim the deduction. So this is the first point. Second point. Second point says, then only you are eligible to claim deduction under section 80QQB. For example, if you have written the textbook, of college, school, university, see college, school, university for different standards, you are having textbook now. If the author has written the textbook in the form articles in newspaper, received is give you any deduction. QQB gives deduction only if you have written the book in the nature of literary, artistic, or scientific. Have you understood this point? Okay. Now let us proceed further. Now we'll understand what is the quantum of deduction under section 80 QQB. What is the quantum of deduction? Means the amount of deduction eligible under section 80 QQB. The deduction under section 80 QQB will be lower of following 2 amounts. Deduction under section 80 QQB will be lower of following 2 amounts. Number 1, actual net royalty income. What is number 1? Actual net royalty income. What do you mean by actual net royalty income? Net royalty means after deducting expenses. See, whatever royalty you might have received from your publisher, the amount of royalty, check the amount of royalty money which publisher has given you, that is a gross royalty. Gross. That is nothing but gross receipt until appear on the credit side of your profit and loss account. But you might be having a lot of expenses also. Once you deduct that expenses, the amount of royalty will be called as net royalty. Net means after deducting relevant expenses. So deduction under section 80QQB is lower of following two amounts. Number one, actual net royalty income. Net royalty income is after deducting expenses. Compared to a maximum limit for deduction 3 lakhs. So deduction under section 80 QQB will be lower of following two amounts. Number one, actual net royalty income. That means after deducting expenses. And number two, maximum deduction, maximum limit is 3 lakh rupees. Now this I have explained you. See, this 3 lakh is a limit for deduction. You cannot claim a deduction of more than 3 lakhs. You cannot claim a deduction of more than 3 lakhs. Now I already explained you royalty income, saying that royalty income can be a capital receipt also. It can be a revenue receipt also. Capital receipt means you have received money for assignment of your copyright. You have assigned your copyright to someone, for that you have received money. Then it can be called as a capital receipt. Capital receipt now you can claim it as deduction, but there is no specific maximum limit for claiming deduction. But that overall limit of 3 lakh is applicable. This 3 lakh now, this 3 lakh is a maximum limit for capital receipt as well as revenue receipt. For capital receipt, we do not have a separate maximum limit, but the overall maximum limit of 3 lakh will be applicable. Overall maximum limit of 3 lakh will be made applicable. So you cannot claim a deduction of more than 3 lakh rupees. If the royalty is a revenue receipt for you, if the royalty is a revenue receipt for you, it is not a capital receipt, it is a revenue receipt for you. In that case, deduction shall be allowed in a restricted manner. There is a separate maximum limit here. We have a maximum limit of 3 lakh. That is a overall maximum limit, which is applicable to capital receipt as well as revenue receipt. But when your receipt is in the nature of a revenue receipt, we have one more limit, and that is 15% of value of book sold. 15% of value of book sold. Say for example, Dikshit is a seasoned author. He has written the book. And he is going to get royalty from the author. Sorry, royalty from the publisher. He is going to get royalty as an author from the publisher, and that royalty is agreed to be 40% of the value of book sold. So he might have received the actual royalty at the rate of 40% of value of book sold. But while you calculate deduction under section 80 QQB, you should apply the maximum limit. What is that maximum limit? 15% of value of book sold. Maximum limit is 15% of value of book sold. Is that very, very clear? Yes, have you understood this? So what is the maximum limit for claiming deduction? Maximum limit for claiming deduction is 3 lakhs. Irrespective of whether the nature of royalty is capital receipt or revenue receipt. But if it is a revenue receipt, then one more limit we have, that is 15% of value of book sold. This limit will be applicable only when you are receiving the royalty as certain percentage of value of book sold. If you are receiving royalty which is certain percentage of value of book sold, then you apply this limit of 15% of value of book sold. Now I am on to last part. It says, if you have published the book outside India, If you have published the book outside India, means you are earning royalty income from abroad. If you have published a book outside India and you are earning royalty income from abroad, in that case we are saying that we will give you deduction under section 80 QQB, but your deduction will be restricted. Your deduction will be restricted. Restricted to what amount? Restricted to amount brought into India. Restricted to amount brought into India within 6 months from the year, 6 months from the end of the year in which royalty is earned. For example, your previous year is 2021. That will end on 31st March 21. That will end on 31st March 21. So from that 31st March 21, you count 6 months. That would be 30th September 21. That would be 30th September 21. So if you earned royalty from abroad, from outside India, then one limit would be amount brought into India within 6 months from the end of the year. Say for example, you have earned a royalty of 10 lakh rupees, 10 lakh Indian rupees, and this royalty is earned from abroad. So government says we will give you deduction only to the extent you are bringing that amount to India within 6 months from the end of the year. Now out of 10 lakh, say for example, you brought into India only 7 lakhs. Then 7 lakh will become a limit for claiming deduction. We will not give you a deduction of more than this. So if the royalty is earned from abroad, it is earned from outside India, then one of the limit for claiming deduction would be amount brought into India within 6 months from the end of the relevant previous year. That amount brought into India within 6 months will act as one of the limits. So read the note what it says. If the royalty income is earned from outside India, then deduction shall be restricted. Deduction shall be restricted to amount brought into India within 6 months from the end of the year in which royalty is earned. That amount you have to bring into India in a convertible foreign exchange. That amount you have to bring into India in a convertible foreign exchange. See, Nepal currency is not considered as convertible foreign exchange. Pakistan currency is not considered as convertible foreign exchange. You bring dollars, pounds, etc. in India. That would be considered as convertible foreign exchange. So, if you have earned the royalty from outside India, yes, maximum limit of 3 lakh is applicable. Maximum limit of 3 lakh is applicable in all situations. Then we have more limits also. When you receive royalty as certain percentage of value of book sold, then we have one more limit, which is 15% of value of book sold. If you have earned royalty from abroad, then we have one more limit, amount brought into India within 6 months from the end of the year. So in this case, the 3 lakh limit will be applicable. One more limit will be applicable, amount brought into India within 6 months. So in that case, we will have multiple maximum limits. We will have multiple maximum limits. Is that clear, Deva madam? 3 lakh maximum limit is applicable in all cases. But in special situation, some extra limit will be introduced. What is the special situation? Number one, you have received the royalty as certain percentage of value of book sold. You have received the royalty as certain percentage of value of book sold. In that case, that limit would be 15% of value of book sold. Another possibility is you have earned royalty from abroad, from outside India. In that case, one more limit will be introduced, and that is amount brought into India in foreign currency within 6 months from the end of the relevant year. Within 6 months from the end of the relevant previous year. Or say for example, you have published a book. Your book is published in Your book is published in Israel, so for example. Your book is published in Israel. Now there is a fight going on between Israel and some other country, na? Palestine. In this case, is it possible for you to bring that foreign currency in India? The situation is such that no one can visit that country as of now. So, because of this genuine reason, say for example, there are a lot of corona patients in particular country. So, is it possible for you to visit that country and get money in India? No. Or businesses are closed in that particular country due to some other reason. In that case, also it is not possible for you to bring that money into India in foreign currency within a period of 6 months. In that case, what you can do now? You can apply to Reserve Bank of India for extension of time. Reserve Bank of India can grant you extension of time. If RBI has granted extension of time to you, say for example, RBI said that we are giving an extension of 6 months. In that case, anyway, 6 months was allowed now up to 30th September. 6 months from the end of the relevant previous year. That is, our previous year is 2021. This will end on 30th March 21. From 30th March 21, 6 months is 30th September 21. But RBI says we are giving you extension of 6 months. In that case, for you, the date will be 31st March 22. Whatever foreign currency you bring to India within 31st March 22, that amount will be taken into account for the purpose of computation of deduction under section 80 QQB. Have you understood this? Yes or no? Yes. See, in November 2020 examination, question number 1, which was compulsory, na? That question number 1 consisted of alternate minimum tax. It also consisted of section 80 QQB. Section 80 QQB was asked as a part of a big question. It was forming part of your compulsory question in November 20 exam. Now I am having a format for calculation of deduction under section 80 QQB. But before we refer to that format, let us quickly go through these all points, 7 points. Who is eligible SSC? Resident individual. Nature of deduction. Deduction is allowed for what? For writing book in the field of literary, artistic and scientific. And you have received consideration from the publisher. That consideration is either a lump sum consideration or a revenue receipt. All it is a revenue receipt. Nature of books, literary, artistic and scientific nature of books you should write. Quantum of deduction, maximum 3 lakhs. Quantum of deduction, maximum 3 lakhs. If you want to claim deduction under section 80 QQB, you should get a certificate by the publisher. From the publisher, you should get a certificate. If you want royalty from abroad, then that foreign currency should be brought into India within 6 months from the end of the year. No double deduction will be allowed to you. If you have claimed deduction in this section, no deduction in any other section. Now we actually go on to the format of the solution. Format of the solution. Point number A is gross royalty received. Point number A is what? Gross royalty received. What do you mean by gross royalty received? Gross royalty received is nothing but amount of royalty received by author from the publisher. Gross royalty received is nothing but amount of royalty received by author from the publisher. That is called as gross royalty received. Point number B will be applicable only when the royalty is a capital receipt. Point number B will be applicable only when the royalty is a capital receipt. Lump sum consideration for assignment of right. Against point number B, you will write the amount only when the royalty is a lump sum amount for you. Point number C, Point number C will be applicable only when you are receiving royalty as certain percentage of value of books sold. Point number C will be applicable only when you are receiving royalty and that royalty is calculated as certain percentage of value of books sold. Say for example, you have received royalty at the rate of 40% of value of books sold. In that case, point number C will apply. In point number C, you will calculate at 15% of value of books sold. Let me give you a number. For example, you have received a royalty of 4 lakhs. You have received a royalty of 4 lakhs and that is calculated at the rate of 40% of value of books sold. So that 4 lakh will be written against point number A. Point number C, what we will write? If you have received the royalty as 40% of value of books sold and you have received an amount of 4 lakhs, then 4 lakh you should write against point number A. That 4 lakh is called as gross royalty received. Point number C, what you will write? 4 lakhs divided by 40%. Multiply by 15%. See, don't apply 15% on 4 lakh. Because 15% is required to be applied on the value of books sold. Value of books sold is not given to in the question, but actual royalty is given to in the question, and that actual royalty is calculated at the rate of 40% of value of books sold. So 4 lakh is 40% of value of books sold. So how much will be 15% of value of books sold? It is nothing but 1 lakh 50. 1 lakh 50. Have you understood this calculation? Swati madam, have you understood? You should not apply 15% on 4 lakhs. 4 lakh itself is 40%. So how much would be 15%? You just do the cross multiplication. So 4 lakh divided by 40% multiplied by 15%. That would give you 1 lakh 50. So point number C you should write. Point number C will be applicable only when you are receiving the royalty as certain percentage of value of books sold. Then you see point number D. Amount brought into India up to 30th September 20. Actually, it should not be 30th September 20. It should be 30th September 21. So if in your book it is printed as 30th September 20, kindly make it 30th September 21. What is this amount? This point will be applicable only when the royalty is earned from abroad. This point will be applicable only when the royalty is earned from abroad. So if you have earned the royalty from outside India, then that amount you should bring it to India within 6 months from the end of the relevant year. Within 6 months, we should bring that amount to India. So point number D is amount brought into India within 6 months from the end of the year. That is 30th September 21, because your previous year is 2021. Previous year 2021 will end on 31st March 21. So from 31st March 21, you take 6 months. That would be 30th September 20. That would be 30th September 21. Is that very clear? Dixit, I will summarize computation table, and we also have the question on this. We have a separate independent question on this. Don't worry. Once again, I am repeating point number A, B, C, D. Point number A is applicable in all cases. Point number A is what? Amount of royalty received by you from the publisher. That is point number A. Point number B will be applicable only if the royalty is some lump sum amount. Point number B. If the royalty is lump sum amount, don't write anything in point number A, you write in point number B. If royalty received by you is calculated a certain percentage of value of books sold, if royalty received by you is calculated at certain percentage of value of books sold, Can you calculate 15% of value of goods sold? Right against point number C. If you have earned royalty from outside India, then whatever amount you have brought into India within 6 months from the end of the year, that amount will, that you compare with a maximum limit of 3 lakhs. So first of all, you select lower out of A, B, C, D. That will become your point E. From that point E, you deduct expenses. From point E, you deduct the expenses. How much expenses are required to be deducted? There is a controversy here. Some authors feel that entire amount of expenditure should be deducted. And some of them feel that you should deduct the expense on proportionate basis. You should deduct the expense on proportionate basis. Which proportion? From the total amount of royalty, whatever amount is eligible for deduction, that is nothing but point number E. That is nothing but point number E. So how you take the proportion of income which is eligible for deduction, to that apply that proportion to the expenditure also, and then you find out the proportional expenditure. For example, you have earned a royalty of 10 lakhs. You have earned a royalty of 10 lakhs. So in point number A, you write 10 lakhs. You have earned a royalty of 10 lakhs. Huh? You write point number A, 10 lakhs. Thereafter, you are saying that this royalty is earned from abroad. So then we will ask you how much money you brought into India within 6 months from the end of the year. You are saying that I have brought into India, say 5 lakh rupees or maybe 7 lakhs. You have earned 10 lakhs, but you brought into India only 7 lakh within 6 months. Then amount number A will be 10 lakhs. Amount number D will be 7 lakhs. Now I will select whichever is lower. So 10 lakhs or 7 lakhs, whichever is lower, 7 lakhs. I have selected 7 lakhs. Now from that 7 lakh, you deduct expenditure on a proportionate basis. You have earned a royalty of 10 lakh rupees. Now, for example, for earning that 10 lakh rupees, you incurred an expenditure of say 3 lakhs. You incurred an expenditure of 3 lakhs. Now, you tell me 3 lakh is the expenditure incurred for earning a royalty of 10 lakhs. Then what would be the proportionate deduction for earning 7 lakhs? Just do the cross multiplication. Just do the cross multiplication. That would be how much? On 10 lakhs, you incurred expenditure of 3 lakhs. Then on 3 lakhs, you might have incurred a proportional expense of how much? Sorry. On 7 lakh, you might have incurred proportional expenditure of how much? Do one thing, I'll give you example here. Example for understanding. Can you see the word file? Proportionate expenses. No, you can't see. Now, can you see the example? Word file? Yes, okay. Example for understanding proportionate expense. Example for understanding proportionate expenses. It is not at all difficult. You just do the cross multiplication. Say for example, this is actual royalties earned from abroad. Actual royalty earned from abroad is nothing but gross royalty. That is nothing but gross royalty. Let me give you the number. This is 10 lakhs. Now, since this royalty is earned from abroad, you have to apply one limit. Amount brought into India to 30th September 21. Say for example, this is 7 lakhs. In that case, we would select what? We would select 7 lakh, na? Because you have to select which was lower. So amount selected for calculating deduction would be 7 lakhs. Correct? Now from this, you have to deduct expenditure. Proportionate expenses. For earning a royalty of 10 lakh, say for example, you have incurred an expenditure of 4 lakh. For earning a royalty of 10 lakh, you have incurred an expenditure of 4 lakhs. So out of 10 lakhs, Dikshit, why 30th September 20? In your textbook, it is wrongly printed as 30th September 20. I asked you to rectify now. This is 6 months from the end of the relevant previous year. What is your relevant previous year, Dikshit? 2021, right? So 6 months from the end of 31 March 21 would be 30th September 21. Dikshit, have you understood? Okay. Proportionate expense. For earning a royalty of 10 lakhs, you have incurred an expenditure of 4 lakhs. Out of 10 lakh, how much is eligible for deduction under section 80 QQB? 7 lakh is eligible for deduction. So, you give me the amount of proportionate expenditure. For 10 lakh, the expenditure is 4 lakhs. So, what will be the proportionate expenditure here? Yes, 2,80,000. That proportionate expenditure will be 2,80,000. That's all, very simple, just a cross multiplication. So you get the amount of 2,80,000. Deduct this 2,80,000. The amount which is arrived is called as net royalty income. Net royalty income means after deducting expenses. So 7 lakh minus 280 will give you how much? 5,20,000. This will be compared with maximum limit for deduction is 3 lakhs. And your deduction will be lower on that. Deduction under section 80 QQB is lower of 520 and 3 lakhs. That is 3 lakhs. Have you understood the calculation? Yes or no? For not by mistake 5,20,000 I have written. 7 lakh minus 280. It will be 420, not 520. 420, yes. 420 or 3 lakh, which is lower 3 lakhs. 3 lakh will be the amount of deduction under section 80 QQB. Yes, have you understood the calculation? Yes, okay. So this format you have to follow. It is simple that you have to just fill up the amount. Follow the format, fill up the amount, that's all. So you have question number 9 here. I can give you 2-3 minutes to solve. One column around 3/4 minute. 3 minutes I am giving you. Sarvana, I told that if you are bringing money to India, you should bring money in India within 6 months. But if you are unable to bring money in India within 6 months because of some genuine reason, then you can ask for extension of time. RBI can allow you extension. If RBI has allowed you some extension in time, then you have to look at the amount brought into India within the extended period. Then you have to look at what? Amount brought into India within the extended period. So that condition for what? That condition is for the amount you have brought into India. Say for example, up to 30th September, you brought only 7 lakhs in India. Because of some genuine reason, you could not bring remaining 3 lakhs. Now RBI has given you extension up to say 31st December. Up to 31st December, you brought 2 lakhs more. In that case, 9 lakhs will be taken into account for the purpose of computation of deduction. 9 lakhs will be taken into account for the purpose of computation of deduction. Sarvana, have you understood? Okay. So now we have question number 9 here. Do the orally calculate it very quickly. Column X, Y, Z and A. I am giving you 2 minutes time. Kindly quickly calculate this. Okay, let us proceed. Let us focus on the first column first. Column X, it says royalty on books covered by section 82B is 90,000. Is it a lump sum payment for assignment of interest in copyright? No, it is not a lump sum payment. So I will write amount of 90,000. I will write the amount of 90,000 against point number A. Rate of royalty as value of books sold. What is the royalty as percentage of value of books sold? 18%. So this 18% is applied for calculating the royalty. Number 2, 15% of value of books sold, which is 75,000. And number 3, amount brought into India within 6 months, that is 70,000. Now out of these 3, you have to select whichever is lower. Out of these 3, you have to select whichever is lower. So you have selected what? You have selected 70,000. 70,000 is gross royalty eligible for deduction. From that, you have to deduct proportionate expenses. For earning a royalty of 90,000, you have incurred an expenditure of 10,000. So what expenditure would be proportionate to 70,000? Is nothing but 10,000 divided by 9 multiplied by 7. That is 7,777.77. So you can take it as 7,778. Now, out of 90,000, 75,000 and 70,000, what is the lower amount? 70,000 is the lower amount. So you have selected 70,000. From that 70,000, you deduct the proportionate expenses, which is 7,778. So the balance amount will be 62,222. That 62,222 you compare with the maximum limit for deduction, which is 3 lakhs. And you select whichever is lower. So your deduction under section 82B will be 62,222 in the first column, that is column X. Have you understood the calculation? Let's move on to the second column, column Y. So we'll move on to the second column, column by. Actual royalty is how much? 3 lakhs. Actual royalty is 3 lakhs. Is it lump sum amount received for assignment of interest in copyright? No. 3 lakh is my first amount, gross royalty received. Rate of royalty is 17.5%. So here I should calculate the amount of royalty at the rate of 15%. So 3 lakh is 17.5%. So what is 15%? 3 lakh divided by 17.5 multiplied by 15. I will get 257, 143 or 257, 142. 257, 142. So it is 162, 857. This is the amount of deduction. Is that very clear? Second amount, second column. Yes or no? Yes. Let's move on to the third column. Third column, what is the amount of gross royalty? 6 lakhs. Gross royalty is 6 lakhs. Is it lump sum amount for assignment of right in the copyright? No. So this point B is not applicable. At what rate? Royalty is calculated 12.5%. 12.5%. So that 15% point will also not apply, na? Gross royalty restricted to 15% of value of books sold. This point will be applicable only when the royalty is received at a rate which is higher than 15%. In this case, anyway, the royalty is calculated by applying 12.5%, which is even less than 15%. So this point number C will also not apply. Not applicable. C 1,80,000. Net amount of royalty 420. Net amount of royalty is 420. That 420 will be compared with 3 lakhs, which is the maximum limit. So what will be the amount of reduction? 3 lakhs. Have you understood this? Let's move on to the last column now. Last column. Column A. Column A, gross royalty is 8 lakhs. Is it lump sum amount? Yes. So you should not write amount against point A. You should write that amount against point B. If it is a lump sum amount for assignment of interest in copyright, against A you should not write. Against A you should write only when it is a revenue receipt. If it is a capital receipt for assignment of right in the copyright, then you should write against point number B, that is lump sum amount. Percentage is not applicable in this case. So third amount will not be there. Third amount is applicable only in case of revenue receipt. Amount brought into India within 6 months is how much? 7 lakhs. Royalty earned from abroad and amount brought into India within 6 months is 7 lakhs. So out of these two amounts, 8 lakhs and 7 lakhs, I will select whichever is lower, that is 7 lakhs. Give me what will be the proportional expenses? What will be the proportional expenses? I have incurred an expenditure of 2,40,000 for earning a royalty of 8 lakhs. So what will be the proportional expense to the tune of 7 lakhs? 2,10,000. 2,10,000. So what is the net royalty? 7 lakh minus 2,10,000. That is 4,90,000. That will be compared with the maximum limit of 3 lakhs. So the deduction will be 3 lakhs. Is that very clear? Yes. So with this, we have completed our discussion with respect to section 80 QQB with this practical question. Now we are left with 3 sections in this chapter. In this chapter, we are left with only 3 sections now. 80 RRB, 80 TTA, and 80 TTB. Let's move on to 80 RRB. 80 QQB is over. 80 RRB. The 80 QQB was royalty income of author. 80 QQB was royalty income of author. 80 RRB is royalty on patent. 80 RRB is royalty on patent. What do you mean the patent? Maybe you might have done some research. Say for example, a person has found out a vaccine for COVID. Then that vaccine formula will be registered under the Patent Act. Copyright is different, patent is different. Copyright will be applicable in case of books, movie, music, etc. Patent will be applicable in case of medicines, etc. Registration of patent is done for an invention. If you have done any invention, so some new thing you have made, so that invention you can register under the Patent Act 1970. Who is the eligible assessee? Eligible assessee is a resident individual who is either a owner of the patent or co-owner of the patent. Who can claim deduction? Deduction is available only to the resident individual who is registered as true and first inventor. These words you can underline: true and first inventor. True and first inventor. This is not related to auditing. This is not true and fair view. This is true and first inventor. Say for example, I have searched a vaccine. I have done a research and I have found out a vaccine for COVID. And say for example, Sarvana has copied my formula. Sarvana has copied my formula and he has also made a vaccine. So Sarvana is not the first inventor. In fact, he is not an inventor. He has just copied my formula. He is not an inventor at all. So can Sarvana claim deduction? No. He can't. And now say for example, I have also researched a vaccine. Sarvana is also doing research. He has also found out a vaccine. I have registered vaccine in the month of January, whereas Sarvana has registered in the month of February. Will Sarvana claim deduction in section 80 RRB? Can he claim deduction? No. Why? Because he is not the first inventor. Because he is not the first inventor. Only first inventor can claim the deduction. True and first inventor. True inventor means he should not have copied formula of someone else. First inventor means he is the first to find out that thing. In other words, deduction will not be allowed to a second inventor and a false inventor. So deduction is allowed to true and first inventor. For example, I have found out a formula for the vaccine, but I don't have that much amount of money that I set up a factory, do the production and sell the vaccine on money. So what I will do now? I will do tie up with some very big company who is in the business of manufacture of vaccines. I will share my formula with them. I will share my formula with them. Thereafter, by using my formula, they will manufacture vaccines. And they would sell the vaccines in the market. They would earn money. Out of that, they would give me some amount of money as royalty. Out of whatever earnings they have made, from that they would pay me certain sum as royalty. So eligible assessee is resident individual who is either a owner or co-owner of a patent. He should be a true and first inventor. Subsequent inventors cannot claim deduction. Nature of deduction: this deduction is available in respect of income by way of royalty. Royalty of what? Royalty of any patent registered on or after 1st April 2003. If you have registered any patent on or after 1st April 2003, then you can claim deduction. Quantum of deduction will be restricted to 3 lakhs. The deduction shall be restricted to the royalty income, including consideration for transfer of right in the patent or providing information for use of patented process. Exemption shall not be available on any consideration for sale of products manufactured with use of patented process or patented article. See, if you have a patent using that formula, using that patented formula, you have manufactured the product and you have sold the product and you have realized money. That income will not be eligible for deduction. Why? Because we are not giving you deduction for sale of goods using the patented formula. We are giving you deduction for royalty income. So you have given your formula to someone else and that person is using that formula. He is manufacturing vaccines, he is selling the vaccines in the market, and out of whatever he has earned, he is giving you something as royalty. This section deduction is only for royalty income. It is not for income from business profession. So if you use the formula and you manufacture the vaccine on your own, and by selling the vaccines you want profit, that amount is not eligible for deduction under section 80 RRB. What is eligible for deduction under section 80 RRB is only royalty income. So exemption will not be available for a consideration for sale of products manufactured with the use of patented process or patented formula. If you want to claim deduction under section 80 QQB or 80 RRB, in both sections, you have to take a certificate. In case of section 80 QQB, you should get a certificate from the publisher. The publisher, the person who has published your book, from that person you have to get a certificate. In that certificate, what will be written? The amount of royalty he has given to you, how that amount of royalty is calculated, all these things will be written in that certificate. So here also in section 80 RRB, you have to take certificate from the prescribed authority. You have to take certificate from the prescribed authority. What is the time limit for bringing foreign currency into India? It is 6 months from the end of the relevant assessment year. Sorry, relevant previous year. 6 months from the end of the relevant previous year. Can you ask for extension? Yes. In genuine cases, the RBI may give you extension. Point 7 says no double deduction. No double deduction. Last point is point number 8. Last point is point number 8. Listen to me carefully. For example, I have done some research and I have found out the vaccine for COVID-19. Sarvana has copied my formula. And that formula he has also registered in his name. He is also now manufacturing vaccines and selling it. He has given his formula to some other company. That other company is using that formula and they are manufacturing vaccines and selling in the market and they are paying royalty to Sarvana. For that royalty, Sarvana is claiming deduction in Section 80 RRB. I realized that the company to whom I had given contract, their vaccine sales have reduced. So I tried to find out why the vaccine sales are reduced. So that company told me that, sir, there is an alternative vaccine available in the market at a lower price. So I tried to find out who is that person who has come out with a formula for vaccine. So I came to know that some other company is manufacturing vaccine and the formula for the vaccine is given by Sarvana. Later on, I realized that Sarvana is from commerce background, so he cannot do any research. He only knows the spelling of research, that's all. He cannot do research. So what I have done now, I have filed a case against Sarvana saying that he is not capable of doing any research. He has just copied my formula. He has registered that formula in his name and he is earning royalty income and he has already claimed deduction for 5 years. In that case, court will give its decision. So court also came to know that yes, Sarvana has just copied the formula. So what court will order now? Court will pass an order to cancel his patent. Court will pass an order to cancel his patent. So court has passed an order to cancel his patent. His patent is already cancelled. Now what income tax department will do now? Income tax department will withdraw whatever deduction was given to Sarvana in the last 4 years. Sorry, in the past years, whatever deduction was given to Sarvana in Section 80 RRB, that entire amount of deduction will be taken. It will be added to his income in the year in which court has passed the order of cancellation of patent. Whatever deduction was allowed to Sarvana in the past, that amount will be taken. It will be added to Sarvana's income in the current year. Current year means the year in which court has passed the order for cancellation of patent. And in that year, tax will be levied to Sarvana. This deduction will be withdrawn and tax will be levied. Yes, have you understood this? Now the point is, his deduction will be withdrawn, amount will be added to his income. So that amount will not be added to current year's income. Amount will not be added to current year's income. In the past year only, his income computation will be revised. Whatever deduction he had claimed, the deduction will be cancelled. So automatically his past year's income will increase. So there is a time limit for the income tax department to revise this calculation of past year. Income tax department will say that actually you were not eligible for claiming any deduction. By mistake, we have given you deduction on the understanding that you had done the research and the research is registered in your name. On that understanding, we had given you deduction. But now we have realized that it was our mistake to give you deduction. You were not eligible because you were not a first inventor. In fact, you were not an inventor at all. In that case, income tax department officer, he will revise the income of the past years. You don't have to do anything. Income tax department will rectify their mistake. They will say that by mistake we had given you deduction. So let us rectify our mistake. And that mistake should be rectified within a period of 4 years. 4 years from which year? From the end of the year in which order of the court is passed for cancelling the patent. Say for example, in case of Sarvana, order for cancellation of patent is passed in the financial year 2021. So financial year 2021 will end on which date? It will end on 31st March 21. From that 31st March 21, you take a period of 4 years. That is 30th March 22, 23, 24, 25. Income tax department is having a time of 4 years, that is up to 31st March 25. What income tax department has to do? whatever deduction Sarvana is already claimed in that year, department has to remove the deduction, revise the calculation of income, rectify the mistake, revise the calculation of income, and demand extra tax from Sarvana. Demand extra tax from Sarvana. Is that very clear? Now Dikshit is asking me, sir, what is the format for the calculation? Format for the calculation of deduction remains the same. Format for the calculation of deduction under section 80 RRB is same as section 80 QQB. So there is nothing new in the format, same format you have to follow. With this, 80 RRB is also over. Now we are left with two small points, two small sections, very small sections, 80 TTA and 80 TTB. Section 80 TTA and section 80 TTB. I'll just read the section in front of you. Okay. Section 80 TTA. This is deduction for what? Deduction for interest on savings account deposit. Whatever interest you have earned on savings account, na, that interest will be eligible for deduction under section 80 TTA. See, if you recollect, in the chapter of income from other sources, I had explained you that interest on post office savings account is exempt. How much? If you are having a single account, up to 3,500 per annum. 3,500 per annum. If you are having a joint account, then 7,000 per annum. Do you remember that provision? Section 10 clause 15. It was taken up in the chapter of income from other sources. But if you are having a savings account with a bank, this exemption of 3,500 and 7,000 is available only when you are having a savings account with post office. What if you are having a savings account with bank? Then interest is fully taxable. If you are having a savings account with bank, then your interest is fully taxable. So, for that interest, you can claim deduction under section 80 TTA. For saving account interest, you can claim deduction here. So now you may ask a question, sir, in case of saving account with post office, we are getting exemption. Besides exemption, will we get the deduction also? Answer is yes. We will get deduction as well as exemption both. But in case of interest earned on saving account with bank, you don't have any exemption. You have only deduction. So who is the eligible SSE? Eligible SSE is either individual or HUF. Either individual or HUF. Deduction is on account of interest on deposit. Which deposit? Deposit in a savings account. So nature of deduction, it says deduction is allowed to an SSE in respect of income earned by way of interest on deposit. Not being time deposit, which are deposit repayable after a expiry of fixed period of time. In other words, FD interest not eligible for deduction under section 80 TTA. Only interest on saving account is eligible. Saving account with whom? Saving account with a banking company, saving account with a cooperative society engaged in banking business, and post office. You have saving account with them, you can claim deduction for interest. Quantum of deduction. Maximum deduction is 10,000 rupees. Maximum limit for deduction is how much? 10,000 rupees. Point 4. Point 4 says that if the aforesaid income is income on saving account interest, is derived from any deposit in the saving account by or on behalf of firm, association or person, body of individual, then no deduction shall be allowed in respect of such income in computing the total income of any partner or the member of AOP. See, this deduction is available only to individual and HUF. If you are having saving account on behalf of firm or on behalf of AOP BOI, then firm and AOP BOI, they cannot claim deduction. Can you claim deduction on their behalf? No. Deduction will not be allowed to you. Is that very, very clear? Yes. So with this, we have completed section 80 TTA. We need to do detailed discussion of section 80 TTA with numerical examples. But before that, we will complete section 80 TTB, and then we'll move on to discuss the numerical example with respect to section 80 TTA. Very important note, deduction under this section. Under this section means which section? Section 80 TTA. Deduction under section 80 TTA would not be available to a resident senior citizen. Why? Because a resident senior citizen, for him a separate section is made. Section 80 TTB. Section 80 TTB. So all persons other than resident senior citizen can claim deduction in section 80 TTA, and if you are a resident senior citizen, then you can claim deduction in section 80 TTB. So I have completed section 80 TTA. Now 80 TTB, I am giving you, I think 2 minutes are sufficient. 2 minutes are more than sufficient. I am giving you 2 minutes time. You go through section 80 TTB on your own. What I want from your side is, once you have completed this, I would ask a question to you. What is the difference between section 80 TTA and section 80 TTB? While you go through this section 80 TTA, you have to ascertain the differences. What are the differences between these two sections? That is what you have to ascertain while reading itself. So take 2 minutes time, read this and identify the difference between 80 TTA and 80 TTB. Have you found out some differences? Dikshit says 80 TTB, interest on fixed deposit is allowed as deduction. Sarvana says post office 1015 interest is 3,500, 7,000 for 80 TTA. Let me read the section for you. Let me give you some distinction points. Number 1, section 80 TTB is a section in which deduction is allowed only to a resident senior citizen. This is the first distinction point. Number 2, deduction is allowed for interest on savings account as well as interest on fixed deposit account. 80 TTA covered only interest on savings account. This is covering interest on savings account as well as interest on FD account. You can have a bank account with a banking company, cooperative bank engaged in banking business or post office. These things are common. Third point of distinction is in section 80 TTA, deduction is allowed for maximum 10,000 rupees. Whereas here in section 80 TTB, deduction is allowed for up to 50,000 rupees. Besides that, third point is common. Third point says that where interest income is derived from any deposit held by or on behalf of firm or AOP BOI, then the partner of the firm or member of AOP BOI would not be allowed deduction in respect of such income. Who can claim deduction in section 80 TTB? Only individual. Whereas in section 80 TTA, even HUF could claim deduction. So there are basically 4 distinction points which I have discussed with you. Now Let us go to some numerical examples. Can you see the screen? Word file, word file. Yes. Okay. So first of all, we have case one. Say for example, you are having a post office savings account and you want an interest of 20,000 from post office savings account. So what will happen? Post office savings account interest will appear in IFOs. From that you can claim exemption of how much? 3,500 in case of single account. So out of 20,000, 3,500 will be exempt from tax. Balance 16,500 will be taxable to you under IFOs. Balance 16,500 will be taxable to you under that IFOs. And that 16,500 will definitely form part of your gross total income. Now, can you claim deduction under section 80 TTA? Yes. To what extent? 10,000. 10,000 you can claim deduction in section 80 TTA. Have you understood the first case? Yes or no? So deduction and exemption both can be claimed simultaneously. Let's move on to second case. You are having an income from other sources, post office savings account interest, 10,000 rupees. Out of the 10,000 will be exempt in section 10 clause 15 is 3,500. Out of 10,000, what will be exempt in section 10 clause 15 is 3,500. After claiming an exemption of 3,000 will be allowed to you in section 80 TTA. Have you understood this? Yes or no? Yes. So let's move on to the third case. 80 TTA. Only 3,000. Only 3,000. Yes. Case 4 is clear. Shall I proceed? Not case 4, sorry, case 3. Case 3. Case 3 we have done. Now I move on to case 4. You are having a post office savings account. You want an interest of 20,000. This is a joint account. So you will claim exemption of 7,000. Since this is a joint account, you will claim exemption of 7,000. So what is forming part of your gross total income is 13,000. What will be the amount of deduction under section 80 TTA? Will it be 10,000 per person, joint account 20,000? In case of joint account, that amount will be doubled up. In section 10 clause 15 exemption, we are doubling the amount from 3,500 to 7,000 in case of joint account. But here that amount will not be doubled up. Deduction will be 10,000 only even in case of joint account. So your deduction will be 10,000 rupees only in case 4. Let's move on to case 5. Post office savings account interest is 30,000. Out of 30,000, in case of joint account, 7,000 is exempt. What is forming part of your income is 23,000. What will be the deduction under section 80 TTA? 10,000. 10,000. Is that very clear? Let's move to case 6. Interest on bank saving account. See, till now, all the examples are case 1 to case 5. They were talking about the post office saving account. Now, case 6 is talking about which saving account? Saving account with bank. Saving account with bank. If you want interest on a saving account with bank, then section 10 clause 15 exemption is not available. Section 10 clause 15 exemption is available only if you are having a saving account with post office. Section 10 clause 15 exemption is not available if you are having a saving account with a bank. So no exemption here in section 10 clause 15. Your entire 30,000 interest will be forming part of your income from other sources. Entire 30,000 will be forming part of your gross total income. How much reduction you can claim in section 80 TTA? 10,000. Section 80 TTA deduction is available even for interest on saving account with bank. Section 80 TTA deduction is available even for interest on saving account with bank. Have you understood this? Yes or no? Yes, okay, let's move on to the last case. That is case 7. Income from other sources, saving account with bank, interest is 3,000. That is fully taxable, that will form part of your IFOs as well as gross total income. How much deduction in section 80 DTA? 3,000. 3,000. Because only 3,000 is forming part of your income now. In your income, if you are having a saving account interest of only 3,000, why should we give you deduction for 10,000? Yes. So I have given you examples, 7 different examples to make you understand different situations. So you should be very alert. Examiner can ask you such points as part of very big question. So where it will appear, IFOs, how much exemption, chapter 6 deduction, how much deduction, that all things you have to understand. So this chapter is over. Now let me ask very simple one question to you. Actually, I wanted to ask you one question relating to section 80D. Section 80D, do you remember section 80D? Health insurance premium. Section 80C, there was life insurance premium. Section 80D, there was health insurance premium. I want to just one that question. One question has come to my mind, so I'm asking you that question to you. In fact, one point I have already explained you. If you recollect, if your employer is paying your life insurance policy premium, if your employer is paying your life insurance policy premium, then what will happen? For that premium, employer will claim deduction in section 37 subsection 1. Employer will claim deduction in section 37 subsection 1, and that premium will become taxable to you as per section 17 subsection 2 clause 5. It is treated as perquisite, and that same premium you can claim it as deduction in section 80C. Same premium you can claim it as deduction in section 80C. Now second example, second point. Say for example, employer has paid your health insurance premium. Employer has paid your health insurance premium. That health insurance premium for employer, it is a expenditure. So he will claim deduction. Whether deduction will be allowed? Yes. Deduction will be allowed in this section, section 36 subsection 1. Section 36 subsection 1 says deduction will be allowed provided payment is made by any mode other than cash. Employer can claim deduction for health insurance premium paid for employee provided the payment of premium is made by any mode other than cash. You can refer, it is third point in section 36 subsection 1 list. Now, will this form part of employee's income? Employer has paid health insurance premium for employee. Will this form part of employee's income? Answer is no. Why? Because it is exempt from tax. Because it is exempt from tax. So for that health insurance premium, can employee claim deduction in section 80D? Can employee claim deduction in section 80D? No, because that premium which is paid is not added to income now. You can't claim deduction. A life insurance premium paid by employer is first of all added to employee's income. Since it is added to employee's income, It is forming part of his gross total income. He can claim deduction in section 86. Whereas health insurance premium paid by employer is an exempt perquisite in the hands of employee. It is an exempt perquisite in the hands of employee. Since it is an exempt perquisite, it is not taxable under that income from salary. And since it is not taxable under that income from salary, deduction will not be available under section 80D. Deduction will not be available under section 80D. Is that very, very clear? Yes or no? So income based deduction, we have understood how many sections? Income based deduction. 5 sections, 5. Five sections. First was section 80 JJAA. This was for employment generation. You can remember this as 80 JJAA. JJAA means jobs available. JJAA means jobs available. 80 QQB, royalty income of authors. This is for writing a book. Book is called as kitab in Hindi. In Hindi, book is called as kitab. So you can remember kitab book. Section 80 QQB, kitab book. Section 80 RRB. Section 80 RRB is royalty on patent. Patent means he has invented something. He has done some research. So you can remember big research. Research. Bada wala means big. Research big. Big research means you will register the patent and you will generate huge amount of income. Section 80 TTA is deduction with respect to interest on savings account. How much deduction? What is the limit for deduction? 10,000 rupees. So you can remember 80 TTA. 80 TTA is 10,000 allowed. Section 80 TTA is 10,000 allowed. Section 80 TTB. Section 80 TTB, who can claim deduction? Only senior citizen can claim deduction. Only resident senior citizen can claim deduction. Senior citizen means a elder person, very elder person. Senior citizen in Hindi, we call it as Buddha. Do you understand Buddha? Very old person. Buddha means very old person. So, section 80 TTB, we say it is Sanatan Buddha. Sanatan Buddha. So, these sections I have helped you to remember. With this chapter is over. Deduction chapter is over. So, chapter number 11 is over. Miscellaneous chapter we have completed now. Miscellaneous chapter we have done. So now we are left with TDS, TCS, advanced tax, return of income, self-assessment, income exempt from tax, computation of total income and tax liability. See, return of income and self-assessment, both chapters will take maximum 3 hours each. Return of income, self-assessment 3 hours, income exempt from tax here 3 hours, computation of total income and tax liability, chapter 16 4 hours, and TDS chapter will be around 10 to 11 hours. You can consider it as 10 hours. So two lectures, minimum 2 lectures for TDS. Rest all chapters one lecture each. Maximum one lecture. Bye bye.